have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space, on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line, we'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got stocks close to session lows. The Dow, the S&P, NASDAQ 100 index all trading lower. Stocks and bonds are retreating as investors focus on inflation and the impact of policy tightening by central banks. Tech companies leading today's losses. Right now we have got NASDAQ down 214 points, a drop of 1.6%. The NASDAQ 100 index down now by 1.7%. The S&P 500 index is down 51 points, down 1.1%, and the Dow is down 209, a decline there of 0.6%. Spot gold is down 52 cents the ounce to $19.46, little change. Crude, though, a big story, 4% drop today for West Texas Intermediate crude, lower by right now down at $94.30 a barrel. Investors are focused on inflation. And that's a Bloomberg Business Flash.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, we are streaming on YouTube. It is Monday, April 11, 2022, and tech stocks once again really the dominant drag on the overall U.S. equity trade, Tim.
Yeah, bonds also lower, Treasury yields to a 3-year high. This is investors' focus on inflation and, we're getting ready for that eye-popping print. 8.4% is what analysts are saying.
Bloomberg Economics saying this could be the top.
I know. I like
inflation.
I'm okay with that.
The peak. We shall see. So we're going to talk about that. We'll get more in just a moment. Also back with us, Natalie Jaresko. She's former Ukraine Minister of Finance. She's back with an update on the war, the destruction. So looking forward to our conversation with her.
Yeah, it's always really great to chat with her. A double dose today of tech for you on two of the heavyweights in our world. First, Carol, on why after billions of dollars in a decade of time, the Amazon drone delivery program, it still is not off the ground. I'll never forget 2013, the night before Cyber Monday, Jeff Bezos on 60 Minutes saying, hey, we are going to get these packages delivered to you in just a few years.
Exactly.
Well, the skies are not full of those drones yet.
Right, showing off drones, and we're all like, wait, is this the shiny new thing? What about the real business? Also, Elon, what do you mean you don't want a Twitter board seat? We're going to get into that.
Yeah, I know. He just likes to keep us busy, especially on weekends, right? It's among the most read on the Bloomberg today. And then Brad Stone has some thoughts on Elon, who he notes is among the, quote, 3 of America's top technologists that are talking and tweeting with unusual fervor these days.
Yeah, and a really cool most read story about legal marijuana retailers, what they are doing, what they are providing to their community. It might surprise you. We're going to get to that in just a moment. Let's get to the Market Drivers Report. Let's set that business week agenda on, it feels like a Monday, a shortened holiday trading week. Let's remind you, Kriti Gupta, markets correspondent at Bloomberg in our Interactive Brokers studio. So too is Abigail Doolittle. She's markets reporter at Bloomberg News. Kriti, let's kick it off with you. Tech once against the drag, but I feel like we've even seen the broader market kind of move to its lows of the day or near it.
Yeah, we really have, and I think a lot of people are pointing to what's going on in the bond market naturally as what's spooking tech. And remember, we have to be really careful with the margin of the move that we see in tech. So now we have an 8 basis point move in the 10-year yield higher. That is a big enough margin to spook tech. When you have it 2 or 3 basis points, it's usually not enough to move the needle. But today, it is one of those yield-driving day. We should also mention, just on a sector basis, you mentioned this, but you are seeing industrials actually marginally higher. And throughout the session, it wasn't a broad risk-off session. You did see pockets actually do well, especially with higher yields. So consumer staples, another yielding sector, for example, materials, financials. These are all kind of
home builders are up.
Yeah, so these are all
kind of weird.
It is kind of a weird,
considering
and
higher. I don't know.
You're seeing a lot of cross currents, and Abby's going to probably give a lot more better color on this because she aced it this morning on the 10 to 12. But I think also one of the bigger movers you have to keep your eye on is the real yield. And I'm usually a stocks girl. I don't love talking about bonds, but this is a bond day.
That sounds like a deep tease for your chart of the day.
It is.
Okay.
But it's also worth mentioning now because it's really important. And don't worry, I'll give you more context for chart of the day. But the real yield is getting...
Because we've been negative for so long.
We've been negative for so long. We're getting really close to positive territory at a time when people are kind of shaking up their bets on what the Federal Reserve is really going to be targeting here. Are they going to be successful in reining inflation? We'll talk about that more at 3:30, but it is influencing what you're seeing in the stock market.
Abigail Doolittle, come on in here. What do you have your eye on this Monday afternoon?
Just this incredible backup in rates. It just continues and continues. We've talked about this before, that sometimes big moves go longer and further than you could possibly think. And for a myriad of reasons, it seems as though we're going to see yields reverse back down as there's a bond for bids, in part maybe because they're attractive, because they're so oversold. However, I will say, Matt Miller, this morning, we had a conversation where he made a great point, suggesting that there is maybe reason to think that the great bond bull market is over, only because if you think about the downtrend in yields, it has not been pierced yet. But if you think about CPI or PPI, they're basically at 40-year highs. So if yields at some point follow CPI and PPI, it really could be over. I mean, basically right now that 10-year yield is above that trend line. It's just a question of whether it comes back in very quickly, as it has in the past.
Is that the story with tech stocks today? Is it the rise in yields that we're seeing? Is that why we're seeing tech stocks decline?
I guess it's the biggest piece of it, but sometimes, this market, it's just... all year, it's just soft. It's mushy. Investors are nervous. They don't know what to do. They want more information. And so it's definitely probably the biggest piece, the Fed and liquidity. And I think that just in terms of, it's so funny because in 2020 when tech, these names were like the safety trade, to me, like growing up learning about tech, that was not the case. When I worked as an institutional salesperson, it was for a technology firm, and tech was the growth, the momentum, the excitement. And so to hear it as the safety trade, it's like, whoa. And now
but it's so much a part of our economy now, right? If you think about whether it's a cell phone, like you can't think about, no matter what the economy is, being without it. Maybe you don't buy a new one, but nonetheless, so much of this is part of our regular economy now.
And so to that point, yes, and also just from the standpoint of these mega cap techs, I mean, their balance sheets are just incredible. The cash that they have and the power and the reach. On the other hand, we have some of the tech leading. Yes, it's certainly the valuation from rates, but it also comes to mind to think that back in the day, some of these names they would be the first to sell off. So maybe a little bit of that also. But it's just, again, investors want more information. They want to know what the Fed is going to do.
Enter earnings, which might give us... I love Gina Martin Adams writing that, if you're looking for more information, like, we might just get it from the earnings. We start, in all honesty, and big time with those big banks this week.
Yeah, and with earnings, it's not just about are you making more margins. It's about what are you going to do with all that cash that's about to be worth less in the future given inflation. It's also about how much capital expenditures, right? How much are you investing in the growth of your business, which a lot of people are saying, well, maybe we should hold off right now while we're so worried about kind of decelerating growth. That's another piece. And the last piece, in addition to all the Fed stuff that Appy was talking about, is the China COVID outbreak, right?
I'm glad you brought that up.
A lot of that is also going to be weighing on tech when it comes to supply chains, when it comes to chips, and when it comes to port closures, because that's a situation that isn't getting better anytime soon, and it's a policy that isn't changing anytime soon. That's going to have a direct effect when it comes to not just stocks, but commodities as well, which are down across the board.
Well, in keeping with that, just crossing the Bloomberg terminal, Philadelphia reimposing its indoor mask mandate. Just a reminder, everyone, we're still in a pandemic.
We are, and we also should keep in mind that we're not seeing all of the data right now. Some states are reporting their data every day to the CDC, the numbers that we're seeing, and then a lot of these are home tests too that are going up.
I got to tell you, it's the fourth time that I have been told that in my orbit somebody has COVID. And I'm just Tim's like, thanks. Great working
it's
with
not like
you,
we
Mal.
spend 3 hours together in a little bubble each day.
I'm just saying, like, it's just, we all keep getting notified. Anyway, we got to run. Creedy and Abigail, thank you so much.
Let's get to Washington, D.C. for a check the latest world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. President Biden says the U.S. and its allies are working closely together to manage the destabilizing effects of Russia's war against Ukraine. During a virtual meeting today, India's Prime Minister Narendra Modi commented on Russian aggression. He speaks here through an interpreter.
The news about the killings of innocent civilians in the Bucha city was very worrying. We instantly condemned the killings and have called for an independent inquiry.
Narendra Modi also said India has provided medicines to Ukraine and will provide even more medicines. Tensions, though, have been building between the U.S. and India over Modi's reluctance to criticize Vladimir Putin's aggression in Ukraine. Well, the U.S. government's COVID vaccine strategy may have to shift away from free shots for all. Bloomberg's Amy Morris has more from Washington.
Annual COVID-19 boosters for all Americans tailored to the prevalent virus strain would cost billions of dollars each year and may not be sustainable. Analysts tell Bloomberg it would make more sense to focus on at-risk groups. A Kaiser Family Foundation analysis says it would cost more than $9 billion to purchase enough second-round boosters for everyone. Analysts see a time when booster shots are free only for at-risk groups. Everyone else would pay through their health insurance or out of pocket. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden is taking his infrastructure tour to the nation's heartland tomorrow. He'll be highlighting investments in rural America by heading to Menlo, Iowa, just west of Des Moines. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Just want to go back, though, to that headline that just crossed. And this is the market environment and just overall environment that we are living in. Just when we think we get some clarity on something, we're just a reminder that in this case, we're still in a pandemic. So Philadelphia bringing back its indoor mask mandate. Health commissioner there saying at a briefing today, the reinstatement of the mask mandate is the first among major U.S. cities. And Tim, coming just over a month after it was officially lifted.
Yeah, during that period, though, there has been an increase in COVID-19 cases within the city, driven by the highly infectious Omicron subvariant of BA2.
And I know we keep a watch on it, just in general, what happens here in New York City, but just what I watch what's happening either in Europe or in China,
Yeah.
and whether or not that's an indication of kind of, do we go through another wave?
Well, again, I'm going to repeat something that I said at the end of our last segment because I said it so quickly, Carol. But the data that we used to cover so closely, we don't have the same quality of data right now because a lot of the positivity that we're seeing is due to home tests, and those aren't necessarily being reported. And then you have seen this lull in infections in a lot of states, so you don't necessarily see the same level of reporting on a daily basis to the CDC that was happening throughout the pandemic. So we're not getting the same quality of data.
Right, so that's important. So what the early warning systems may not be there. Speaking of warning systems, we continue to watch, of course, all the difficult situations that are happening still in Ukraine. And one of the stories that caught our attention is the general who ran Syria operations is now leading Russian troops in Ukraine. So there's been a shift, it looks like, at the top when it comes to military operations out of Russia in Ukraine.
We're talking about General Alexander Dvornikov, commander of the Southern Military District, who will now lead Russian troops on the ground. That's according to Western security officials and diplomats with knowledge of the change. The Kremlin, though, we should note, has not announced news of the appointment.
Right, and he notably oversaw Moscow's forces in Syria in 2015 and 2016, where they fought alongside Syrian government troops in a conflict where, as you remember, President Bashar al-Assad was accused of using chemical weapons against his own people. So we're going to talk about the humanitarian and the military impact, obviously, on Ukraine in just a moment, right here on Bloomberg Business Week. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are now at the low of the day. We've got the S&P down 59, a decline of 1.3%. Stocks and bonds are retreating as investors focus on inflation and the impact of policy tightening by central banks. The Dow is down 278, drop there of 0.8%. Again, the S&P down 1.3%. NASDAQ is down 1.7%, while the NASDAQ 100 index is down 1.8%. The 10-year yield, 2.78%. Spot gold flat on the day, up just $1 now at $19.48 the ounce, while West Texas Intermediate crude back to February levels. WTI down 3.4%, $94.95 a barrel on West Texas Intermediate crude. Again, recapping, stocks lower, S&P down 58, drop now of 1.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. You know, as the Russian war in Ukraine continues on now in its 7th week, I couldn't help but being drawn back to the early March cover story of Bloomberg Business Week, one in which Bloomberg's Mark Champion wrote about Vladimir Putin and how, after a quick victory did not seem likely, that his end game seemed to be reducing Ukraine to rubble. And as we see the destruction that grows every day, that end game seems inevitable. Meantime, Ukraine President Volodymyr Zelensky on CBS's 60 Minutes last night about what NATO nations have done so far for his country.
I just want to thank that for your support, and support, first of all, for people, because all the people, all the nations, first of all, they push their leaders. It's not only about your country, it's about our country. It's about all the world.
That was President of Ukraine, Volodymyr Zelensky, on 60 Minutes yesterday. Let's get now to a crucial voice. You've heard her on our airwaves before. We're talking about Natalie Jaresko. She's former Ukraine finance minister. She served in that position from 2014 to 2016. She was born here in the U.S., but she spent after her 20s, after she was educated here, she moved back to Ukraine and lived there. She's now executive director of the Financial Oversight and Management Board for Puerto Rico. She joins us now on the phone from San Juan, Puerto Rico. Natalie, good to have you back with us. How are you?
Thank you, Tim. Thank you for having me.
Hey, well, you know, it's been a few weeks since we've gotten to speak with you, and I just want to start with getting an understanding of what you're hearing from your friends who are on the ground in Ukraine. You spent so many years of your life there, and you presumably continue to talk to folks there. What are you hearing?
Absolutely. I'm in touch all the time. I guess it's really important to note that with all of the news of the horrendous atrocities and the impending, what appears to be massive invasion in the east, Ukrainians are actually, facing this with immense courage, and that courage is leading them to start rebuilding. So even in the towns of Irpin and Bucha that have been destroyed recently, the work has begun already to remove debris, to build back the bridge that had been blown up, to restore, rebuild electricity, heat, and water. The government is focused on getting planting started. This is the spring planting season for agriculture. As you know, Ukraine is one of the largest agricultural exporters in the world. And businesses are moving facilities to Western Ukraine, where the war has not had as much of an impact, and restarting manufacturing to the extent that they can. And so what you're seeing is this kind of response to the horrors and the tragedies with even greater courage and intent to rebuild, renew, and normalize. And so I think it's an amazing combination of human dignity and courage.
It's like hard to even get your head around that, right? I'm kind of in awe, right? That they're planning for the future and, moving forward with so many questions still yet to be answered. Natalie, I know your focus is, economic and financial situations, but obviously all of that weaves into politics, military, economy. It's all interwoven. Having said that, how do you see this situation overall? Is the West at Russia already?
Well, I think the important thing, Carol, is that Putin is at war with the West already. And he always has been, and he's been very clear about it. And so whether or not any of our Western allies believe that they are or not, the fact is that Putin believes he is. And so we are all in this together. This is about his attempt is not only to destroy Ukraine, which is clear, a genocide of the Ukrainian people, which he's had published in articles, but it's also about destroying the liberal world order, the democratic world that we all take for granted every day, and that enables us to live in peace and freedom. And so we are fighting an autocrat who wishes to destroy our system.
So,
and that's why in the end, it really is up to all of the allies, up to the democratic nations of the world, to support Ukraine in this battle, because Ukraine has to prevail. If Ukraine does not prevail, we as a democratic world do not prevail.
Well, that's what I wanted to ask you. And I was listening to the Ukrainian president on 60 Minutes last night, and he can't give in on anything. Like, I'm thinking if there are talks or peace talks, they've already given in, right? Ukraine, you were there with Crimea and the Crimean Peninsula. So at this point, can the Ukrainian president say, yep, I'm willing to give up this? Or if he does, is that a loss for the West overall? And then it just means we will probably see President Putin come back in another aggressive mood sometime in the future.
Well, I think that that's exactly what's happened. We all kind of said, just sit back. After he invaded and illegally annexed Crimea, then he invaded Donbass. Mm-hmm. We held them to the line for 8 years, but the war continued, and it was not enough. Putin's aims are not territorial. Russia is an enormous country. It doesn't require any more territory for its population or for its economy. This is not about territory. And I think the core thing for Western countries and for all of us is to enable Ukraine to prevail. And that, that doesn't mean that there shouldn't be diplomatic talks, but it means that we should focus on giving Ukraine the weapons they need to defeat and to prevail in this war, the sanctions to reduce the Russian ability to finance the war, getting our businesses to boycott the Russian economy and not finance this war against Ukraine. And then with that leverage, when they're prevailing, talks can take place and something can be achieved in those diplomatic talks, so be it. Peace is always welcome. But the first thing to focus on is not the talks and the outcome of the talks. The first thing is to focus on getting Ukraine strong enough to prevail with weapons, sanctions, and boycott, and then hoping that enables talks to be successful.
Natalie Jaresko, stand by, because we're going to come back with you. We're going to do some news, and then we're going to come back with the former Ukraine finance minister. She served in that role from 2014 to 2016. She's executive director of the Financial Oversight and Management Board for Puerto Rico, joining us from San Juan, Puerto Rico. We're talking Natalie Jaresko.
Yeah, curious, too, as the Austrian chancellor meeting with President Putin, who are the global leaders that he might listen to in this situation? This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic here live in our Interactive Brokers studio. We're going to get back to Natalie Jaresko, former Ukraine finance minister, talking with her about the current situation of the war in Ukraine.
First, though, a check of the trading day with just under 90 minutes to go. Here's Charlie Pellet.
Hi, thank you very much. We're looking at session lows right now, Tim, with the Dow, the S&P, NASDAQ very much in the red. Stocks and bonds are retreating as investors focus on inflation and the impact of policy tightening by central banks. S&P down right now by 60 points, a drop of 1.4%. The Dow down 280, a decline of 0.8%. NASDAQ is down 246, a decline of 1.8%. 10 years down 21 seconds, 10-year yield now 2.78%. Spot gold virtually flat on the day, up 45 cents right now to $19.48 the ounce. Crude, though, big story back to February levels. West Texas Intermediate crude down another 4%, 94.31 a barrel. China's largest COVID-19 outbreak in 2 years continues to spread despite an extended lockdown of Shanghai's 25 million people, with the restrictions weighing on a fragile economy and straining global supply chains. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
Well, they're taking such extraordinary measures to keep it down that they really are not in a position to get over it that quickly, I think, unless they can manage to eliminate it entirely, which is going to be quite difficult.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Right now, we've got among some of the vaccine names that we track on a regular basis, Pfizer down 2%. BioNTech, its German partner, the ADR is down 0.5%. AstraZeneca's ADR is down 0.2%. Moderna down now by 1.8%. J&J, Johnson & Johnson down by 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, I want to get back to our guest. Still with us is Natalie Jaresko, former Ukraine Minister of Finance. That was from 2014 to 2016. As we remind you, during that initial Russian invasion and occupation of Ukraine. She's also the executive director of the Financial Oversight and Management Board for Puerto Rico. And you might recall we mentioned this too, that she was the subject of a Bloomberg Business Week story back in 2015. It was entitled The American Woman Who Stands Between Putin and Ukraine. She's still with us on the phone from San Juan, Puerto Rico. Hey, Natalie, does anybody anymore stand between the world and Vladimir Putin?
Well, Carol, it's a good question. Does anyone stand in between? I think there are those who are trying not to choose, and I think that it's quite sad. If you look at a country like India, one of the largest, greatest democracies in the world, they're abstaining on critical UN votes, and they are continuing to trade with Russia. They're continuing to buy Russian oil. They're continuing to avoid applying any sanctions. I think closer to home, to be frank with you, I'm disappointed that so many companies, so many American companies like Citi and Mars and Koch Industries, refuse to boycott the Russian market, continue to make announcements that they feel they have a need to continue serving the Russian people and the Russian market at a time when their tax revenues are going directly into financing this war. And I think that it's harmful, it's pitiful, especially when U.S. taxpayers are being asked to contribute to fighting the war and defending.
Natalie, do you think the sanctions work? And I asked that looking at the data we got a couple weeks ago that show how high Putin's approval rating is right now, more than 80% in a recent poll. Do the sanctions seem to be working?
I think the sanctions are working, but we don't have enough of them. So the sanctions worked to crimp the financial system. The problem is that we haven't done enough, and so we've sanctioned a handful of banks. We've removed a handful of the banks off the SWIFT system, but not all 300. I'm of the belief that every day counts, and we need to do much broader, much deeper sanctions. I think it's important the export controls are working. You're seeing that in the defense industry in Russia, some items are not being able to be manufactured anymore because they don't have the imported parts. So over time, some of the sanctions will work. I think the challenge is that it's not working fast enough. And for For Ukrainians, every day, thousands of lives and immense destruction. So there's much more we can do in sanctions, not just in the banking sector, but clearly in the energy sector, and that has a lot to do with Europe. Purchasing oil and gas, Europe purchasing oil and gas is the single greatest financing tool of Russia. And until that ceases, that money continues to be used to keep the Russian economy alive.
I mentioned that the Austria chancellor is meeting with Vladimir Putin. Who, if anyone, of global leaders that are out there does have sway with Vladimir Putin?
You know, I haven't I haven't seen anyone have that kind of sway. I'm always hopeful. Every conversation has a grain of hope. I think President Macron has faced, had multiple conversations, long conversations, and gotten nowhere. Not even in the most basic attempt to establish a humanitarian corridor out of Mariupol, a city in the southeast of Ukraine that has been absolutely destroyed and where people are unable to leave safely. So I don't believe that the Austrian chancellor will have a greater effect. It doesn't mean he shouldn't try. Everyone should try. But I don't believe that those conversations are timely right now, in that Putin is not feeling the pressure yet of the sanctions. He's not yet feeling the pressure that he needs to feel in order to take those conversations seriously.
What about President Xi of China, Modi of India? Could they have some sway? Should they have some sway?
I would guess that President Xi, given the close friendship that he and Putin apparently have, potentially could have that type of effect. And I would hope that the Chinese over time start to see that although they've been more or less supportive of Putin in this war, that this is not going to help the Chinese, and that the global economy and the unity that the Western democracies have shown is something that I don't think they all expected. And I don't believe that this continued war is good for the global economy. It's certainly not good for food prices. It's certainly not good for steel prices. It's not good for a variety of things that both the Chinese and the Indians should be looking forward and understanding that the cost, the ultimate global cost of this war, is going to be great for them, not only for Ukraine.
Natalie, we only have 30 seconds left, but about 6 weeks ago you joined us, and you were optimistic when a lot of people were pessimistic about the Ukrainians defending Kyiv. What's the conversation that we're having 6 weeks from now?
Definitely optimistic that Ukrainian courage, fighting, and Ukrainian armed forces will prevail. The unfortunate thing is what the cost will be of that prevailing, but the Ukrainian people are fighting for their very existence, and there is no other route.
Thank you so much, Natalie, for joining us, and certainly what you are seeing on the ground, what you are hearing. I think it's remarkable that they're planting. We've talked about, the importance to the grain market, right, in feeding the world, and that's an important part of their economy, and interesting to see, Tim, them kind of moving forward there on that.
I encourage everyone to go back and read that 2015 cover story that featured Natalie Jaresko, just learning so much about what she's done in Ukraine and her background. Really gets a good understanding of what her role is today, too.
All right, let's get back to world and national news. For that overview, let's head to D.C. and Nancy Lyons. Hi, Nance.
Hey, Carol. President Joe Biden's top economic advisor would not weigh in on whether a recession is just around the corner. But Brian Deese did tell Bloomberg COVID lockdowns in China and the Russian invasion in Ukraine are both weighing on the economy.
We're facing rocky waters right now, but the United States is probably better positioned than any other major economy to navigate effectively through them. Why is that? Strong economic growth, strong household balance sheets, a strong American consumer, and an incredibly strong labor market.
Brian Deese spoke with Bloomberg a day before the release of the March Consumer Price Index. Deese does believe the report will show elevated prices, but he says he hopes inflation will be lower by the end of the year. Russia is claiming it has destroyed several Ukrainian air defense systems as Russian forces move into disputed territory in the east, but the Pentagon's John Kirby is refuting that claim.
I would just say this about Ukrainian air defense. They still have a lot of their air defense capability available to them.
John Kirby says the new general that Vladimir Putin has placed in charge of Russian troops is known for being especially brutal. UNICEF says nearly 2/3 of Ukrainian children have been displaced since the start of the Russian invasion. An official says the situation is dire in cities like Mariupol, where kids have gone for weeks without running water and working sanitation. The UN agency is warning of the long-term effects on kids whose lives, education, and well-being are disrupted by the conflict. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Massar along with Tim Stanovic. And what are you smiling
You
for?
have to forgive me, okay? On our planning call this morning, there have been so many companies that have been doing stock splits. On our planning call this morning, you lost track.
I did lose track.
Because there have been so many.
It's like one after another. A lot of them.
I know I saw something about a stock split today. It was another company. Because it seems like every few weeks there's another large company doing a stock split.
It's so in vogue in 2022. Well, this one is a pretty big one. Shopify planning a 10-for-1 stock split, just becoming the latest tech giant to announce plans to split its stock in a bid to bring a higher number of loyal retail investors to its shareholder base. Stock right now trades, it's up, by the way, up about 3.4% as we speak. So rallying in today's session, $624.88 a share is where we are. So it will certainly make it much more accessible. And especially when I was reading, one of I think our Bloomberg Opinion column is, because we've got into a debate like, because you can buy fractional ownership, does it really make it more accessible? But from what I understand, I think is it the options market, that yes, because you have to buy in lots of a certain size. And so when it is so high, it makes it more difficult.
Yeah, it does. But at the end of the day, it doesn't fundamentally change anything about the company.
No. If anything, a buyback makes your earnings look better because it's earnings per share, right?
Right.
So this.
Well, but this doesn't change the number. This doesn't change the amount
Puts
of
a lot more
money that's outstanding. But it doesn't change. It only changes the number of shares. It just the pie. The pie is the same size.
Right. Puts more shares out there.
Exactly.
In circulation.
Yeah, it does. So you mentioned we mentioned the number of companies that have been talking about doing this recently and the way that the stock has reacted. Alphabet, Amazon, Tesla. The split proposals recently have triggered sharp rallies on the stocks as retail traders who tend to favor stocks with high liquidity and lower price tags, they jumped in. So it helps the retail traders, even though it doesn't necessarily need to, because these retail trading platforms offer fractional ownership.
All right.
Yeah, I know. I go off on these rants, and people always get in touch with me, and they're like, "What about options?" And I'm like, "Well,
Just saying.
Okay.
I'm just saying. Shopify, by the way, is down about 54% this year, and we saw the share price. It's kind of been bouncing around on this news. In fact, it's one of my gainers, and I'm always a little nervous, thinking
it's going to stay.
That's my concern. We shall see. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, and NASDAQ all in the red right now. Stocks and bonds are retreating as investors focus on inflation. We've got the CPI report tomorrow morning, 8:30 a.m. Wall Street time. They're also focused on the impact of policy tightening by central banks. Most groups in the S&P 500 index are lower. The S&P down now by 52 points, bouncing off the bottom, but still very close to session lows, down 1.2%. The Dow is down 231, down 0.7%. NASDAQ is down 215, a drop of 1.6%. The 10-year yield, again, 2.77%. Spot gold up 0.1% right now, $19.49 the ounce. Energy, a big story today. We've got West Texas Intermediate crude down 4.4%, $93.99 a barrel on WTI. Briefly, Elon Musk no longer hosting that question and answer session with Twitter employees this week, since he will not be taking a board seat at the social media company. Twitter shares, they're advancing today. Twitter up now by 2.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Want to get to today's Bloomberg Big. A story about how after billions of dollars being spent and a decade of time going by, the Amazon drone delivery program, Tim, still not off the ground.
Yeah, I couldn't put this one down. It's by Spencer
That's why you didn't get
Soper,
sleep last
and
night, right?
it is. I read it last night. It came out yesterday at 5 p.m. and I read it. I saved it for last night and I stayed up until the end. And Matt Day wrote this story. Spencer Soper is technology and e-commerce reporter at Bloomberg News. He joins us now on the phone from Seattle. Spencer, I actually remember it like it was yesterday. It was the night before Cyber Monday. It was the Sunday after Thanksgiving, 2013. Jeff Bezos goes on 60 Minutes. He does an interview with Charlie Rose, and he says, within the next few years, we are going to be able to get drone packages delivered via drones. Yet, Spencer, here we are, and it hasn't happened yet.
Yeah. What happened?
You tell us.
All right. Well, yeah.
Okay, traders. Hello again. I'm going to move stop for Bitcoin even lower to 40,591. It will give us 4% in profit, and if it will move, like I said, lower, I will place even lower profit. It means in our advantage, because we sold short, it will be higher profit. You understand? All right. I'll speak to you later, guys. We have already 4,000 pounds in profit. So stay cool, and I'll speak to you later.
Summer that happened after one of these things malfunctioned, and then there's supposed to be different safety mechanisms that kick in after a motor failure, but this thing has 6 propellers on it, and one of the motors conked out, and it couldn't recuperate from that, and it careened 160 feet down from the sky and crashed into the ground and ignited this big brush fire. And this is at a time when Amazon's trying to prove to the Federal Aviation Administration that these things are safe. So yeah, there's still a long way off.
A long way off, and we know there's a lot of competition because Amazon's not the only one looking to put drones into the sky. Let's bring in Bloomberg Business Week editor Joel Weber here in our Interactive Brokers studio. What jumped out for you here?
Well, I just think it is one of those great corporate dramas that you have to be curious about because it's Amazon, and like anything happening inside the Amazon, executive suites is interesting. But that competition that Carol mentioned, Spencer, who are the other competitors who are attempting to crack this, or who already have even?
Well, you have a ton of startups. You also have Google, Google's Wing. You have UPS, Walmart. There's a lot of deep-pocketed rivals poking at this. And in fairness to Amazon, we have to look at the capabilities. So some of the startups and things are looking at maybe like a function where it's on a hospital campus or a corporate campus or a college campus, where there might be less risk of going over, uninformed participants, which flying over, uninformed participants, which would happen in more of a public setting. But there's just a lot of people looking at the potential use cases, and what Amazon is doing is being the most ambitious and saying, we want to be able to deliver as many people using this technology as possible and deliver the widest variety of products as possible.
So how does the FAA feel about all this?
Well, they haven't commented specifically on what's happened with Amazon. They certainly had some reports, and what was telling was in the brush fire crash, they did question the airworthiness of this vehicle that Amazon's put together, this 85-pound drone with 6 propellers, because so many things failed. Generally, planes are designed to be able to still maneuver after something fails and still safely land after something fails. And this thing was just a complete breakdown of all of those systems, which was alarming to the FAA. And so that is a big setback, because basically the FAA, they're learning from industry right now. They're looking at all the different folks that are conducting tests, and they're assessing the safetiness of all of the different vehicles. And as they're assured, then they'll gradually let these things be tested in more populous areas. But as it stands, Amazon's still relegated to the boonies. It's doing tests out in Eastern Oregon, where which is largely agricultural areas surrounding this airport in a very sterile environment.
What did you learn about Amazon's commitment to this moving forward? Because the business opportunity, Spencer, as you write, is absolutely huge. What it could do is essentially eliminate the need for paying delivery drivers and get consumers getting their packages within 30 minutes or less in much of the country.
Yeah, I mean, that's the big commitment. Is Bezos in particular has always been after this notion of making Amazon as convenient as a quick trip to the store. And depending on where you live, it still doesn't meet that. I live in the suburbs of Seattle, and I've got a Target, and I've actually got 2 Targets and 2 Walmarts and a Costco, all within a 15-minute drive. So ordering on Amazon is still taking longer to get that item if I can find it at a store nearby. This is the answer to that. And if you can get it down to 30 minutes. But again, it's a question of how broadly it can be deployed, because the only thing that justifies this investment, it's not a worthwhile investment if you can deliver something to a farmer here and there. You need to be able to deploy this in densely populated suburban areas and potentially even cities, and that's the only way it makes sense. And so that's the big question right now is, will that ever happen?
Spencer, you guys did an investigation, thorough internal documents, government reports. What was the takeaway? Do you feel from the conversations and the stuff that you read that you do feel like Amazon is valuing maybe production over safety here?
Well, that's the feeling of many of the people who are on the front lines doing these tests, and that's where there's tension. Is there's people in offices who earn the most money and have goals that they have to make, and they're cracking the whip. And then there are people out on the front lines who are conducting these tests and seeing these things crashing down, and a lot of them are just saying, look, I would not want this thing flying over my house or my children. And some concerns there, and it's to the point they even will bring their vehicles and duck into their cars. They have their cars on standby just in case they need something to take cover in, and those are alarming things for something that they're trying to get more approval to do testing more closer to people and beyond the line of sight of drone operators and that sort of thing. That it's still a long way off.
What do you most look forward to getting delivered by drone, Spencer?
Really quickly.
Nothing. I like to get out of the house.
85 pounds flying around in the air. I'm a little cautious too. Spencer, thank you. Spencer Soper, technology and e-commerce reporter at Bloomberg News. Check out his story. It's the Bloomberg Big Take, and our thanks to Jill Weber, editor of Bloomberg Business Week. This is Bloomberg Business Week, and you're listening to Bloomberg Radio.
down to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session to start the week. Caroline Hyde, Romain Bostic, Shonali Basak with us, joined now by our colleagues Carol Masser and Tim Stanovic, as we welcome cross audiences in TV, radio, YouTube to a market that is in very much risk-off mode, Carol.
Yeah, it definitely feels that way, which is why I'm kind of scratching my head, because the home building stocks are up about 2%, more than 2% today. KB Home did come out and announce a $300 million buyback, and that stock's definitely rallying. But the whole group, we're seeing some gains. So kind of a standout in what is a downward trade today, Tim.
Yeah, not just when it comes to equities and, of course, fixed income, but also when it comes to Bitcoin, down more than 6% right now. It's having its worst day in more than a month, hitting its lowest level since March 15th, Caroline.
So much for inflation hedge.
Yeah, you think it's just, post-Florida, Bitcoin 2022?
I know, but then you got Salt, where they're all going to the Bahamas. Yeah. So we'll talk it up again then. Meanwhile, for now, Bitcoin's on the downside, and so too is tech. And maybe that's what really is the correlation that we need to look at, because we're currently seeing overall a downward trajectory for your NASDAQ. Your worst performer off by 1.5%, 13,506 is where we trade. We're also seeing, of course, those sell-off in S&P 500 when you've got all of the key big tech names, Google and the like, down we go, and 4,438 is where we are, down almost 50 points on the S&P. The Dow Jones coming off a little bit lighter, down by 0.6%. That's 205 points lower. And the Russell 2000 actually flat, let's call it, just off by half a point.
Yeah, not a lot of green to look for anywhere. You have most of the sectors really down on the day, guys, with S&P 500 energy sector really leading the day lower here. Remember, energy is what has been up more than anything else for the year in that sector group. But today, again, industrials, materials are the only ones that are up, and less than 0.3%. Financials now flat despite that steepening yield curve.
Yeah, we talk about those tech stocks. Apple down here, of course, for a second straight day here. More importantly, really kind of weakening after we had saw it kind of make a move a little bit higher, what was it, about a week and a half ago, kind of retesting potentially that record high. It's now back below some of the shorter term moving averages at the 20-day and the 50-day. You're continuing to see weakness in Alphabet shares. Those shares down for a fifth straight day, 2.64% here on the day. To the upside, though, you're looking at AT&T here. Of course, we talk about the closing, of course, of that deal. Of course, the spinoff, or I guess it's basically separate, I should say, Warner Media. Combine that with Discovery here. The idea, AT&T now going to be much more of a pure telecom play. And investors, well, they seem to like it. Those shares up about 8% on the day.
JP Morgan reinstating their coverage on that one, too, right? Yeah.
Tim had been all over it for the week that led up for it. Meanwhile, talking about coverage, talking about really analysis and strategists right now from B of A, really drawing an attention here. I love this one, earnings yield. This is a great chart coming from Dan Curtis that's showing just how low your earnings yield is. 12 months earnings divided by a share price, totally negative, of course, when you bake in, of course, the real factor, which is, of course, inflation. But we've never seen it this low, and usually this would be an indication of some sort of value. Therefore, no value to be had. Bank of America, of course, has previously been seeing that, maybe in these times you go into inflation havens such as energy, financials, real estate. But when you have such negative earnings yield, really what does this mean as we look ahead to earnings season, in fact?
Yeah, and that's a good point. Gina Martin-Adams talking about just in general how much negativity we are seeing in terms of sentiment going into the earnings season. All right, inflation. We get a big print. Core CPI in the U.S. Tomorrow, and also, of course, the headline CPI number. We're looking for, 8.4% year over year. Well, Loretta Mester, president of the Cleveland Fed, on CBS over the weekend, talking about inflation this year and next year. Here's what she had to say.
Well, I think that it will take some time to get inflation down because, as you know, there's other things going on in the economy that are adding to price pressures, including the commodity price increases and energy price increases that are happening as well. So I think inflation will remain above 2% this year and even next year, but the trajectory will be that it will be moving down.
All right. Well, 2% certainly sounds better than, an 8.4%. Loretta Mester, of course, president of the Cleveland Fed on CBS. She does, though, Tim, say that she anticipates that the U.S. will avoid a recession. Well,
that's why it's important when we do get that print to actually look below the headline figure and see what specifically is moving higher or what specifically is moving lower. Are there any signs that it is moderating, especially in areas where, maybe we bought all the, trampolines and hammocks that we needed outdoors during COVID, and that was pulled forward, and people who needed cars bought their cars already, and we start to see a decline in some of those prices and maybe perhaps shift to services finally.
Yeah, and I mean, but the problem, of course, is now you start to talk about sort of the aggregate effects of some of that, whether it does actually tamp down economic growth, even if it doesn't lead to a recession. You start to talk about the potential weight that you start to see on companies and their margins here. I think you mentioned a note, I think it was from Bank of America, but we were talking a little bit earlier about that note out from Marko Kolanovic over at JP Morgan. And then, of course, you have the Mike Wilson note over at Morgan Stanley, all kind of saying the same thing, that maybe you take advantage of the recent rally that we had, take some profits, and sit the rest, or at least sit it out for the next few weeks or months.
And I don't want to add to the glass half empty kind of vibe right now, but it is interesting when you see the headlines coming out of the city, when you look at Philadelphia potentially masking up once again, when you look at what's happening over in China, you have to wonder whether that services demand that you're talking of, Tim, how resilient that is if we do get another wave here in the US.
It's interesting, guys. You know, that JP Morgan note, they didn't lower their price target all that much for the S&P. They are still saying it'll go higher for the end of the year, 4,900. But at the same time, it's interesting to see strategists flip-flop to say buy, sell, and not hold when you think the S&P is going to be higher.
And no, overall, we are seeing this sort of questioning of valuation, but that's what makes a market as well. And interesting as to whether you should be buying bonds at this moment when particularly Amazon comes out with such an enormous sale.
Yeah, it shows that they can still certainly do that, bring that to market. What struck me was, I think, just as you guys were kicking off your broadcast, I know as we were, that Philadelphia reimposing its indoor mask mandate. Yeah. It's just a reminder to me that we are still in this pandemic and we just never know when something is
Carol,
going.
You didn't hear me?
I know. Carol doesn't always listen sometimes.
I'm sorry.
But Carol, I mean, in all seriousness, though, I mean, do you think it's going to really? I mean, I don't want to minimize this at all, but I mean, it is a reminder that the COVID crisis is not over. But there's been a lot of talk, of course, about all the COVID cases that came out of that gridiron dinner about a week ago that affected a lot of politicians, including the mayor of New York City. But the idea here that the strain, the variant that we're going through right now, isn't going to be as damaging health-wise, and hopefully that means it won't be as damaging to the economy.
We're we're already seeing people who tested positive in the wake of that test negative.
Nancy Pelosi, yeah.
Yeah, exactly. And I think that one important thing to keep in mind is it's not just a potentially decline in services in the services sector, how resilient that is, but also how disruptive it is if we do start to see kids getting it again in schools as these mandates have been lifted, and then those schools have to be suspended or those classrooms have to be off for a few days, and then parents have to stay home, and that cycle starts over and over again. It's just very disruptive.
It's just a reminder it's not a straight path to recovery, right? And that there's things that can kind of slow down some of the economic momentum. So anyway, we're going to continue this conversation. We will be back in less than an hour's time on radio, TV, and YouTube. We'll be back for Beyond the Bell, counting you down to the close on this Monday.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, bouncing around here, but definitely seeing pressure on the trade today. It's going to be a big week. We get that inflation print tomorrow, the CPI number. Our Bloomberg economics team talking about that it could be the peak. We'll see if that's the case.
It was such an optimistic take. I appreciate it.
Because it's, you know, especially when you hear someone like Loretta Mester talk about 2% kind of getting back to historical levels. So we will see. That would be a big move to the downside, and a lot has to happen to get to that point.
I want to go to that Bloomberg economics note that you mentioned because, as I did mention, my takeaway from it was relatively optimistic. They write that March's CPI could indicate prices moderating or falling across several goods sectors categories. Those could be consistent with signs of a steep decline in freight activity. It could be ominous, but a more benign explanation could be that it reflects the expectation of a rotation of demand from goods back to services as the pandemic wanes.
Which is what we've talked. We are a service-led economy. We talk about this all the time. And so if we start to see that, and this is where the pandemic comes into play, though. If you're a little bit nervous, if you're cautious, if we start to see cases break out, do people kind of hesitate and hold back and tapping into those services, whether it's restaurants, whether it's travel, what have you?
Also, we've seen a decline just lately in energy prices, oil prices.
I think that's really significant.
I do too. And who knows, you know, there's a lot of volatility there, but who knows to what extent that's permanent, especially, you know, just talking to Natalie Jaresko, the former finance minister of Ukraine, saying that, you know, Europe's reliance on Russian gas is helping to finance this. We know they're not moving away from that anytime soon.
We'll also be watching lodging costs here in the United States. That is a huge component of CPI, and we've talked so many times about the rising costs of housing and also rental properties as well. All right, you are listening to Bloomberg Business Week. Let's get a check on world and national news.
Nancy Lyons is in Washington, D.C. Hey there, Nance.
Hey, Tim. President Biden is cracking down on unmarked ghost guns that are becoming increasingly used in crimes.
Buyers aren't required to pass background checks because guns have no serial numbers, these guns. When they show up at a crime scene, they can't be traced. Harder to find and prove who used them. Meaning you can't connect the gun to the shooter and hold them accountable.
Biden is implementing new regulations that would make it illegal to sell a gun kit without the parts having serial numbers, and also would require any federally licensed gun makers to seize ghost guns and mark them with serial numbers before reselling them. French investigators are in Ukraine to look into allegations of war crimes committed by Russian troops near Kyiv. Ukraine says troops killed hundreds of civilians and looted homes while occupying villages near the capital. Russia denies it, even though there are satellite images, intercepted phone calls, and testimony from eyewitnesses. Russian President Vladimir Putin, meanwhile, has appointed a new general, and retired Brigadier General Mark Kimmett tells Bloomberg that can be a problem.
They've now brought in a single general to unify the command and control. And unfortunately, they brought in a general who's not only known for his military skills, but his military brutality as well.
Retired General Kimmett says Ukraine needs help from the U.S. to identify Russian cannon and missile sites in order to win this next phase of the war. 8 of the world's 10 busiest airports are in the U.S. Atlanta's Hartsfield-Jackson International Airport is once again at the top of the rankings by the trade association Airports Council International. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts and more than 120 countries.
All right, Nance, thank you so much. Carol Massar along with Tim Stanovic live in our Bloomberg Interactive Brokers studio. So a story that definitely came up on our radar, and this has to do with Mark Zuckerberg, of course, of Meta, formerly known as Facebook, or still known as Facebook.
To some.
The ticker hasn't changed yet, right?
The ticker has not yet changed,
Right.
but it's now called Meta Platforms, Inc., the parent company of Facebook.
Well, either Meta or Facebook, the security costs for Mr. Zuckerberg going up.
I mean, come on. Have you seen inflation lately, Carol?
It all costs more.
It does, especially the gas for that private jet. The social media giant previously known as Facebook spent more than $15.2 million in 2021 for expenses related to protecting its CEO at his homes during personal travel. That's according to a recent regulatory filing. It doesn't include another $10 million given to Zuckerberg as a pre-tax allowance for his family's security, as well as $1.6 million for use of a private aircraft for personal travel.
All right, so in total, the company footed a security bill of $26.8 million for Mr. Zuckerberg and his family last year, a 6% increase from 2020.
So below inflation.
Yeah.
Okay.
Right. The filing attributed the higher cost, as you mentioned, to regular personal travel protocols related to COVID-19 and market increases for security personnel. The arrangements comprise almost all of his compensation as he takes $1 annual salary and doesn't receive a bonus or equity awards.
His security costs in 2021 are many times those of peers whose data is publicly available. Amazon.com, for example, spent $1.6 million protecting Chairman Jeff Bezos last year, while Tesla Inc. doesn't disclose any security costs associated with Elon Musk, the CEO.
So that's the kind of interesting point, right? Like comparison, not necessarily apples to apples, but kind of close to apples in terms of big tech CEOs and their families, each worth a ton of money, and what the security concerns are. Well, I wonder if like Jeff Bezos has personal security that he's just footing the bill, right?
That's what I'm
Must
thinking.
be.
Like the money comes from somewhere else because just his travel alone has to cost more than that.
Meta also pays for security for other top leaders, including $9 million or almost $9 million in 2021 to protect Chief Operating Officer Sheryl Sandberg. All right, you're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic. We're live at Bloomberg headquarters in New York City.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A down Monday, stocks very close to session lows. Let's get right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks under pressure from the start today, with the Dow currently down 267 points. S&Ps are down 56. They are trying to hang on to their 50-day right here, while the NASDAQ is down by 222. The U.S. 10-year yield at 2.78%. Gold is little change. Oil trading in the red, but Bitcoin is down by 6%. Among the main 11 S&P sectors, only industrials were in the green. Energy and tech were under pressure, and leaders to the upside in the Dow, Verizon and Boeing, while Microsoft fell 3.5% and led to the downside. In deal news, SailPoint to be acquired by Thoma Bravo for $65.25 a share in cash. And in other news, Philadelphia reimposes the indoor mask mandate, and Shopify plans a 10-for-1 stock split. Wrapping things up, J&J traded to a record high before reversing. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over at your Bloomberg Type Squawk, SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, Charlie, thank you so much. So we've been watching shares of Tesla. Let me just bring them up.
Well, they were down pre-market on this news.
They were. They're still down about 4%.
Yeah.
A few things. We had Tesla exporting just 60 cars produced out of its Shanghai factory. That was in March, a record low as strong domestic demand sucked up most of the output. And then, of course, you have what is the most read on the Bloomberg about Elon Musk saying thanks, no thanks to a Twitter board seat.
Rejecting that offer to join the board in a surprise twist. So a week ago, we were talking about him buying more than 9% of outstanding shares of Twitter.
Yeah.
And a week later, a lot has changed. Let's get into it with Dana Hull, technology reporter at Bloomberg News. She joins us on the phone from our San Francisco bureau. Okay, Dana, the plot thickens. This is never a dull moment in your world, whether it's Tesla, Twitter, or Elon Musk, or all of the above. What does Elon Musk, what can he do with Twitter now that he is no longer, I don't want to say on the board, but like a candidate for the board, or we know he's not joining the board now?
Well, now
maybe that's a better way to put it.
Now he can buy a lot more shares. I mean, so when he was offered the board seat, there was a cap in place where he couldn't buy more than 14.9%. Now that he's not joining the board, I mean, there's no limit to him buying additional shares. So it's led a lot of speculation, like, what is Elon doing? Is he going to do like a hostile takeover? Like what, we would love to know. We were trying to, very eager to get to the bottom of what exactly happened. And it's the whole timing of everything was just so strange. It's like he discloses his stake in the SEC filing. He's offered a board seat, and then late last night, the CEO of Twitter says, well, actually, he's not joining the board. But then if you went to Twitter's website, they already had him listed as a board member. And it's like, did he just not want to go through the training to be a board member? Did he, bristle at the idea of a background check? Like the whole wording of the statement was very odd.
Okay, so, I look at Rich Go on the Bloomberg terminal. Elon Musk is the wealthiest person in the world. He's got a net worth of $260.1 billion. Just today, with Tesla's decline in stock price, he's worth $7.5 billion less. Does he care about his investment in monetary value, or is he just having fun here? Because he has so much money, he could literally afford to buy all of Twitter and do whatever he wants with it.
I mean, yeah, I think that he's got a lot of money. And he is very interested in the media. I mean, he always has been. He is, he reads a lot. He is one of the most active users of the service. He jokes around about having a news site called Pravda. I think he's genuinely interested in this. But what led to the turnaround about like thanks but no thanks? I don't really understand what happened there. Like, did he just, was he just bored? I mean, did he just sort of decide, actually, I'm really busy running my other 4 companies, or was there such an uproar within Twitter that they were going to make it tougher for him? I don't really know. We don't really know exactly what happened, but But this certainly paves the way for him to continue to be an influence. I mean, he's not encumbered by a board seat. He could just be an activist shareholder.
Well, you know what exactly happened, Dana? It's that he actually now wants to get into mining and refining, lithium and all that good stuff. I mean, how do you... what I love talking about you is you're someone who has covered him for a long time and seen his trajectory and the growth of him and things coming out or him saying things and trying to kind of weed through to find out what sticks and what doesn't. How do you kind of determine what sticks and what doesn't in this environment right now?
I mean,
that's a big sigh.
it is a challenge because, I know as much as everyone else does in terms of there's sort of what he tweets and then there's what he says. So, for example, I think what's fascinating is he spent the whole weekend tweeting about his plans for Twitter, the Blue Service, and they should turn the headquarters into a homeless shelter. And then we find out late Sunday night that he actually turned the board seat down on Saturday, and now he's deleted some of those tweets about Twitter. So, the whole TikTok and the timing of all of this, I just am fascinated as to what sort of led him to turn down a seat, then continue to kind of criticize the platform, then delete the tweets. And I don't really know. I mean, it's not like I'm talking to him on the phone. I mean, so... No,
but you know what I mean.
Give me a ring. But I just think it's this is a man who has a wide variety of interests, and he hyperfixates, but then he also moves on. And, it's like flavor of the month. So, I mean, but he's always had his hand in many different pots, and, this is just another one. And I think that his wealth and his... he's definitely empire building, for sure.
Well, Dana, I'm seeing a lot of tweets today from Twitter employees who have been holding back with how they felt about it, and some pretty prominent ones sort of breathing a sigh of relief here. Can you explain what's going on internally at Twitter?
Yeah, I mean, I think what you're seeing people saying publicly is that they're relieved that he's not joining the board, that he would have had a real impact on their culture, and, that the Twitter culture is kind of unique. And how do you absorb a big personality like Elon? I mean, he would dominate no matter what. And so I think that maybe some employees who didn't feel comfortable speaking publicly about him being appointed to the board or nominated for the board are now kind of saying publicly that they're glad it's not happening.
Hey, just quickly, 20 seconds. The news out of China, the cars produced at the Shanghai factory. Just really quickly, what do we need to know?
Well, the Shanghai factory is still closed, as far as I know, because of this COVID lockdown. So I think it'll be really interesting to see how that impacts production in the quarter that we're currently in.
All right, good stuff as always. Dana, thank you. Dana Hall, she is technology reporter at Bloomberg News, on the phone from our San Francisco bureau, as we mentioned, watching shares of Twitter, just one of the kind of big tech, if you will, names under pressure. Stock's down about 4%, 983.7 cents a share. Stock is down about 7% so far this year. You are listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You know, I was just saying we're all on edge. And speaking of that,
Hey, speak for yourself. Just kidding. Yep.
We're seeing some stocks selling.
It's a 4-day week, Carol.
We're seeing some stocks selling into the close here already. We've still got about 29 minutes to go, but we're moving to our lows on the equity side.
We'll also be checking in with Kriti Gupta in just a minute for her chart of the day. First, though, let's get some details on these market moves. Here's Charlie Pellet.
Much we are lower across the board with the Dow, the S&P, NASDAQ. Session lows right now. Do want to begin, though, with Bitcoin. A sell-off there. Bitcoin now down 7.6%, below $40,000. Bitcoin now at $39,830 on Bitcoin. The Dow, the S&P, NASDAQ all retreating along with bonds as investors focus on inflation and the impact of policy tightening by central banks. S&P down now by 64, a drop of 1.5%. The Dow down.
Okay, guys, I'm going to move. Again, we're still holding Bitcoin, so I'm going to move to 5% in our advantage to 40,168. 40,168. Please move your stop for Bitcoin to 40,168. Okay, and stay with me. It gives us already £5,000 in profit, so well done, guys. And let's see, we didn't close yet, so we still holding Bitcoin. Stay safe.
Is Vice Dean at the Johns Hopkins Bloomberg School of Public Health.
Well, they're taking such extraordinary measures to keep it down that they really are not in a position to get over it that quickly, I think, unless they can manage to eliminate it entirely, which is going to be quite difficult.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking the vaccine stocks, they are for the most part lower. Pfizer down 2.4%. Its German partner BioNTech, its ADRs turning around up 0.3%. AstraZeneca's ADRs down 0.6%. Moderna's down 1.4%. Johnson & Johnson down now by 1.2%. Recapping stocks at session lows. S&P down 67, down 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yep, we're seeing some selling here.
Yeah, we certainly are. Thank you so much for that update, Charlie Pellet. As we do each and every day, just after 3:30 on Wall Street, we check in with Kriti Gupta for her chart of the day. If you still don't get Kriti's chart of the day, just send her an email. You can do that at kgupta129@bloomberg.net. That's kgupta129@bloomberg.net. Also, check her out on social media. She's on Twitter. She's on Instagram at Kriti Gupta News. Kriti, your chart of the day, we gave a little bit of a preview at the top of our show today. It's all about real yields getting real. What's going on?
All about real yields getting real. That was actually, by the way, a subject line my producer, Ariel Berger, came up with. She is very smart and witty. But this is really important because everyone's talking about kind of the turmoil that's happening in the bond market. And I want to get a little bit nerdy, if you guys will bear with me here. We talked about the 10-year yield rising and rising. Essentially, investors pricing in more inflation, pricing in more rate hikes from the Federal Reserve. What isn't getting enough attention is that break-evens, which are essentially inflation expectations that are priced in 5 or 10 years out, they're actually dropping. And this is interesting because at a time when a lot of people are talking about, is inflation going to be here forever, the market is actually pricing in that the Federal Reserve is going to get their hands on it. They're going to kind of be able to rein it in with the rate hikes, with the tapering of the balance sheet. And that's a really important part of the conversation. And the way it's showing up is in the 10-year real yield, which is my chart of the day. The 10-year real yield essentially shows interest rates or 10-year rates, regular nominal rates. You take out the inflation expectations and you get the 10-year real yield. Essentially, what is the yield without the inflation priced in? And that is 14 basis points away from turning positive. I'm going to channel Carol Master here and say, here's why it matters. It matters because the minute that turns positive, a lot of the concern is, will people pull out of the stock market and hop to the bond market because they're now making
money on those bond investments in real terms, in inflation-adjusted terms. And that's kind of scary if you're a stock investor and you're saying, well, stocks are just going to go up and up and up because they have been doing that. Well, what happens when people start saying, well, actually, maybe bonds are more attractive?
Well, this is right where you compare earnings yield on the S&P 500 versus what you can make in the bond market. And you would assume, right, with the bond market, you get some level of security, especially in a market where the swings are pretty rough.
Exactly. And I think that's one of the arguments for the bull market in bonds, essentially, which a lot of people, or I should say, the bull market for bonds, which I think a lot of people are saying is dead in the face of higher interest rates, in the face of inflation. But if you actually look at a lot of portfolios, the way they've been allocated, I mean, we talk about the 60-40 ratio all the time, right? 60% stocks, 40% bonds. Well, a lot of it in the last 2 years has been like 90 or 80% stocks because it just didn't make sense to kind of hold on to bonds when you have this inflationary environment. And now a lot of people are saying, well, maybe that's going to kind of skew a little bit more towards bonds.
We always have to do this kind of relative comparison between the two. Hey, we've got to talk to what you have your eye on today.
Yeah, speaking of bonds, the story that you've got your eye on this afternoon, Kriti, is about Amazon selling $12.75 billion of bonds in a 7-part deal. Why did this pique your interest?
That's massive.
It's huge. It's crazy huge, especially from one of the biggest tech companies in the world, I might add. This is really important because we haven't actually seen a lot of tech companies or a lot of really rich companies, to put it kind of crudely, come to the credit market. They did a lot in 2020 when interest rates were at near zero. They were able to borrow at essentially borrowing rates that were very close to what the Treasury borrows at, which tells you that's how securely they were viewed, that people were buying into tech bonds because they said this is almost as safe as an investment as buying into a U.S. government bond. That is huge. So to see Amazon kind of target, and that too in about $13 billion, the bond market and issue debt, it tells you they're trying to get into the market before borrowing costs increase a lot. And it's interesting that they're trying to do this at a time when no one else is really fundraising. So essentially what this is, to me at least, is a case study on the fact that a lot of corporate America is getting ready for higher interest rates, higher borrowing costs, and they're just trying to get their money's worth while they can.
Investors tapping into it big time?
They are tapping into it. And remember, once again, a lot of people look at these bond sales essentially as very, very secure investments. If you were comparing this to, say, an energy company, for example, going into the bond market, you're not going to see the same interest simply because of the last 10 years. And this is really where tech has this kind of upper hand and that they can borrow at these extremely low rates, and they can borrow as much as $13 billion. It's huge.
Shore up the balance sheet right at this point. Amazon last tapped the U.S. debt market when it sold $18.5 billion of bonds in May.
See, that was big.
This is big, too.
Not as big
13 billion is big, too.
It's all big, right? And 2-year to 40-year. I mean, they're really like making sure they've got a ton of cash to play with if they need it, especially if rates continue to go higher, which we all anticipate.
Kriti Gupta, markets correspondent, joining us each and every day at this time with her chart of the day. Sign up for Kriti's chart of the day, kgupta129 at bloomberg.net. Check her out on Twitter and Instagram at Kriti Gupta News. Let's get to Washington, D.C. now for Check the Latest World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden is taking steps to halt the proliferation of ghost guns that can be purchased without a background check and are largely untraceable.
These guns are weapons of choice for many criminals. We're going to do everything we can to deprive them of that choice. And when we find them, put them in jail for a long, long time.
Biden says among the new rules is one changing the current definition of a firearm to include unfinished parts, which must be licensed and include serial numbers. Well, President Biden has tapped Ohio's former top federal prosecutor to head the Bureau of Alcohol, Tobacco, Firearms, and Explosives, starting what is expected to be a contentious confirmation process.
Steve Dettelbach served as U.S. Attorney for the Northern District of Ohio for 7 years after he was nominated by his Harvard Law School classmate, then President Barack Obama. Dettelbach's confirmation will likely be an uphill battle. The White House hopes Dettelbach will fare better than David Shipman, a former ATF agent whose nomination was opposed by Republicans and Independent Senator Angus King of Maine. The Biden administration is also finalizing new federal rules restricting untraceable ghost guns. In Washington, I'm Amy Morris, Bloomberg Radio.
As Russia deploys its forces to eastern Ukraine, White House Press Secretary Jen Psaki says the administration does not expect the fighting to decrease in intensity.
We expect this stage of the conflict could last a long time, and we should have no illusions that Russia is going to adjust their tactics and make them less brutal.
Psaki says there are no current plans for President Biden to travel to Ukraine. Global news 24 hours a day, on air, and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, along with Tim Stanovic, we're watching the markets, and we do see stocks just coming off their lows, but they are near it. So we are seeing some selling with just about 19 minutes to go. In the meantime, we are going to be focused big time on a bunch of economic data this week, including the U.S. CPI report. And having said that, we'll get another weekly read on jobless claims. And this story by Justin Fox, it's in Bloomberg Business Week. It just talks about the number of men that are still missing from the U.S. workforce.
Yeah, there still is this supply and demand issue when it comes to workers, and we certainly see that playing out, not just in the data, Carol, but when we talk to executives about what it's like out there for them attracting and retaining talent. As we do start to hear from companies when it comes to earnings over these next few weeks, it'll be really interesting to get a read from them on how they're seeing employment figures play out.
This is so important,
or how
right?
they're seeing the landscape, I guess I should say.
And you think about the Fed, right? Every time they have a meeting, right, there's this conversation about what is, labor participation, what is the rate it should be, does it go back to pre-pandemic? This story specifically, it talks about employment among Americans in their prime working years, usually defined as age 25 through 54. It's edging closer to where it was before the pandemic, but for prime-age men, an estimated 86.1% of whom had jobs in March, according to the U.S. Bureau of Labor Statistics. So we're talking, March of 2020 versus...
That was March of 2022 versus 2020.
Correct. Versus, okay, so 86.1% in March of 2022, prime-age men. This is compared to 86.5% in February of 2020. That's still quite low by historical standards, but in the 50s and 60s, the prime-age male employment rate averaged about 93.8%. If it were that high today, about 4.9 million more men would have jobs.
So about 3/4 of today's non-employed prime-age men are not in the labor force. That is, they're not actively looking for work. Some are in school, others are taking care of kids, but most appear to be missing from the labor force for less benign reasons that researchers put a lot of effort into understanding back in the 2010s.
And they say the reasons why: there are fewer job opportunities for the less educated, and for the growing numbers of formerly incarcerated men, this is still a component too. There's a lot at play right now, but a lot out of the workforce. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Session lows for the U.S. stock market, the Dow, the S&P, NASDAQ, and bonds all retreating as investors focus on inflation and the impact of policy tightening by central banks. We will get the CPI report tomorrow morning, 8:30 a.m. Wall Street time. Most groups in the S&P 500 are lower. 10-year Treasury yields climbing through 2.75% for the first time since March of 2019. Right now, we've got the 10-year at 2.77%, the 2-year yield 2.49%. S&P down 71, a drop of 1.6%. The Dow down 381, down 1.1%. NASDAQ down 286, a drop there of 2.1%. Spot gold up 0.3%, $19.53 the ounce. West Texas Intermediate crude now at $94.55 a barrel, down $3.71 a barrel. WTI lower right now by 3.8%. Briefly, Bitcoin down 7.2%, holding at just about $40,000 even. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
India has disappointed many of its fellow democracies by not taking a stronger stand against Russia's invasion of Ukraine. Some U.S. officials have even let their frustrations spill out in public. Although understandable, such criticisms are unproductive. The U.S. and its allies should instead concentrate on showing India that its interests are better served through partnership with the West, not Vladimir Putin. After all, India's long-standing ties with Russia can't be severed overnight, nor can the U.S. realistically expect India to abandon the strategic autonomy its foreign policy elite has jealously guarded since independence. Instead, the U.S. and its partners must show India that they can address its needs far better than Russia can, through cooperation, trade, and development. In the end, trying to strong-arm India won't work. Persuading its leaders that the West is a smarter long-term bet will. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, I'm just going to say, if Monday is any example, we're going to be, wrecked by the time we get to Thursday. It's a shortened holiday week, but you and I are both
So
crazy market.
the exchanges are closed on Friday. That's why we're not here on Friday. But a lot of people, including my wife who works for the city, don't have the day off.
Well, that's what happens when you work in anything connected to the financial markets.
Yeah.
Sorry, wife.
Yeah, hello. But here's why that's notable, because I feel like she has so many other days off that I don't get.
Well, it's a market holiday. I always think at the beginning of the year, I'm always like, okay, now what are our market days?
Market holidays are like the bare minimum. I mean, she works for the city, so she gets quite a few more holidays, but not this one.
Exactly. All right, folks, we are hovering near lows. You heard Charlie Pellet talk about it. We really have seen kind of some selling here into the close. We've got about 9 minutes left in the trading session. It's a week that's going to be chock full of economic news. We've talked about it a lot. That CPI print tomorrow, it is expected to be a rough one, but as our Bloomberg economics team have been writing, Tim, you and I have been talking about it, we've read it, that this could maybe be peak inflation, and then maybe we start to see inflation start to normalize.
I think certainly a lot of
Whatever
people
that is.
would welcome that news. Let's see what our next guest has to think about it. Megan Horniman is Chief Investment Officer at Verdance Capital Advisors. Megan joins us on the access line from Hunt Valley, Maryland. Megan, how are you?
I'm great. How are you?
We're doing well. Thanks a lot. The market's not doing so well today. We're seeing quite a bit of selling into the close here, and I'm wondering how you're reading into it.
Well, I think your prior guest also mentioned it, that there is a lot of economic data coming out this week, not just different CPI, PPI reports, but also keep in mind retail sales will be out later this week. You combine that with an ECB meeting as well, and then the kickoff to earnings season. There's a lot for investors to digest right now. Well, they've been kind of whipsawed this quarter to start anyway.
Megan, earnings season is definitely on your mind. We were reading through your research. How can that, and our Gina Martin Adams of Bloomberg Intelligence, who follows the equity markets, she too has been talking about earnings estimates, how they've been going up for the first quarter, but also the second quarter and third quarter, and that how this could really be, certainly maybe a game changer when it comes to sentiment. What are your expectations for earnings as they get underway, of course, with the big banks starting this week?
So the estimates are for the growth to slow considerably compared to what we saw last year, but that's okay. Typically, earnings do end up beating by 3 to 5%. So we think it can be a solid earnings season, but this is really the point where investors can also just get back to fundamentals. The first quarter and even starting off, the past couple of weeks, we've seen sentiment really tested by a complete pivot by the Federal Reserve. We've also seen the war in Russia and Ukraine not ending, inflation an issue. So we have to get back to the fundamentals and actually listen to the CEOs of what they're seeing on the ground as far as the future of corporate earnings.
Okay, so what specifically are you going to be looking to hear from CEOs? I always like hearing from the banks because they have such a good idea of how the economy is. They have all that real-time data that shows credit card spend and what their customers are purchasing. What do you look for specifically?
Yeah, so from the bank perspective, we've already seen consumer credit rise. Last week, we saw one of the biggest jumps on record in consumer credit. So we know that consumers are starting to feel the pinch of higher prices, and they are turning to credit card debt. So you'll get that indication from financials. We'll also look to see what kind of losses they take from any exposure to Russian businesses as well. But some of the more important things that we're going to look at is regarding the supply chain. Are companies seeing any thawing in that? Because there have been some initial signs, economic data that we've seen with some optimism that we might see a turnaround here in the second half of this year. Can that help? Because that can also maybe help alleviate some of the inflation pressures. So we'll look from that perspective as well.
What's unusual in the market trade for you right now?
Unusual. I think right now we're seeing that energy prices have really come down quite a bit. You're seeing oil prices come down significantly, but you're not seeing that also coincide with a decline in inflation expectations. So there's some disconnect there just from the economic standpoint.
And what does that tell you? There's a lot of disconnects. It's funny, I was reading something in earlier about just kind of various disconnects within the market, whether it's between what bonds and the stock market are telling you and other things. When we do have kind of disconnections in our financial markets, is it just kind of a sign of uncertainty? We're just kind of not quite sure what comes next?
Well, yes, it can be a sign of speculation, but I do think if ultimately things revert to where they should be. So I do think that if energy prices continue to come under pressure, that you will see some of the inflation expectations pull back. Right now, there's a lot of information this week that we'll get and more indication to see where we are in inflation. Your prior guest had mentioned that we might be getting to the peak growth levels. I do think we will see peak growth levels this year, but we will be settling into a higher inflationary environment. So you have to be careful of how you're exposed in your portfolios, making sure that you're looking at those areas that aren't overly priced right now. That's the one thing that we would recommend investors to do.
Specific names or sectors that you can give us, at least in the short term?
Well, I think one thing that you have to look at in this very high period of uncertainty is, are you positioned the true way that you want to be? So some of the areas that have been really beat up, look at some of these, the small cap area, the mid cap area, the international area. These have significantly lagged actually the large cap value side of the market this year. Look at those. Make sure that your asset allocation is in line with where you want to be, because I would guess that the majority of these areas are out of line. So it may be a good time to maybe sell some of those managers or areas that have done so well to bring them back in line with where your asset allocation should be, and maybe buying some of those really beaten down areas of the market.
What about fixed income? What's the smart play right now?
You got to stay short and defensive with fixed income.
Yeah.
I mean, that's the only thing from a duration standpoint. And we have seen some weakness in the credit markets and investment grade and high yield, but not enough to warrant really taking some sort of a tactical move there. Eventually yields will rise enough that they'll start to compete with some of the returns in the equity market. I just don't think we're there right now. So for now, stay defensive, short-term floating rate instruments, and then just keep an eye on credit to see if that does present some opportunities.
Okay, Carol mentioned CPI. We get the number tomorrow. Is this the peak for inflation? Do we get it for March?
I think that, whether it's March or April, I think we still probably have a couple more months that we may be in with some upside surprise. Remember, we're not really rolling off the energy yet. That's the second half of the year story. But I do think in the second half of this year that we'll be looking at very different year-over-year growth numbers.
Yeah, that's what Loretta Mester said, maybe later this year and certainly into next year, that maybe we start to see kind of a more like 2% number.
Yeah, 2%, that magic number,
it's
right?
A big difference from where we are. Hey, we got to run. Megan Horniman, thank you so much, Chief Investment Officer at the Wealth Advisory and Multifamily Office firm Verdance Capital, on the phone from Hunt Valley, Maryland. Just a few minutes left in today's trading session. We're pretty much hovering near our lows, down about 1.7% on the S&P. Dow Jones Industrial Average, a decline of 1.2%. NASDAQ taking it on a chin, down 2.2%, so the biggest loser among those major equity averages. Right now, we're going to join over to our TV team for Beyond the Bell, live on radio, TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hodge, Sonali Bassick in for Taylor Riggs. We're counting you down to the closing bell here. And now taking us beyond the bell, it's our global simulcast partners, Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, and of course on YouTube. Carol, looking at stocks right now, right around the lows of the day, 2% declines for the S&P and the NASDAQ.
Yeah, seeing some selling in this last half hour of trading. So pretty much, as you mentioned, Romaine, now down near our lows. I was looking at the NASDAQ, though. It looks like volume is down about 7.5% from the past 20 trading days in comparison. So while we are seeing some selling, maybe the conviction isn't there like it has been in the past. Tim.
It seems like the conviction is there with selling Bitcoin today. It's having its worst day since February 17th. Vildana Heinrich had a really interesting story where she talked to somebody at Coinbase who, actually had a note out that says potentially it's ahead of tax season. People are selling. So looking for some explanation as to why the selling.
Rebalancing.
Today. Yeah, that magic word, right? Yeah. That it's hard to explain moves in Bitcoin, though.
Yeah, I mean, not always fundamentally driven, should we say. Interesting that the Russell 2000 that we're looking at had been your outperformer, in fact, basically flat, but suddenly taking a tumble down by some 0.7% as well. Domestically focused companies also getting a worry. There is such a wall of worry today, Sonali, whether it be the war, whether it be COVID, whether it be, of course, Fed policy too.
And you've got to wonder about the correlations at this time. Is it Bitcoin correlated to the dollar? Is it correlated to inflation? And at the other end of things, is the NASDAQ down while yields are up? Is it as simple as that, or is it something else?
All right, well, we're going to have a moment of truth, I think, over the next 3 or 4 weeks here as we get earnings season to see how some of these companies hold up with regards to margin, with regards to revenue growth, and how that, of course, plays in to the whole picture with regards to those lofty valuations in the face of rising yields. That earnings yield differential that you showed a little bit a while ago, Caroline, certainly going to have a big effect on investor sentiment as we move deeper into the year. As for today, on this Monday afternoon, you're looking at a Dow Jones Industrial Average. It's going to finish the day down by more than 400 points, or down about 1% or so. S&P 500 down by about 75 points, or 1.7%, and the NASDAQ indices, both the NASDAQ Composite and the NASDAQ 100 down more than 2% here on the day, and the Russell 2000, which you just showed, moving lower here by about 14 points on the day, down by about 0.7%. I should point out one of the few bright spots today is actually the Dow Transports, which are actually higher here fractionally on the day, though most of the movers in that index here are still in the red.
All right, Romaine, I'll see your transports and mention once again home building stocks, because they ended up about 1.5% for the day overall. So in a day where we saw a fair amount of selling, broad-based, we did see, Sonali, those investors come into those home building names.
Yeah, into the home building names, but at the same time, you don't see a lot of love in many of the sectors here. You only have a couple sectors that are in the green. That's transportation, food and beverages in the S&P 500, but banks are flat, even with that yield curve steepening quite a bit today. Insurance is down on the day, even with those yields up. Telecom services, really the steepest decliner, more than 6.6% down on the day, guys.
All right, so let's get to some of those gainers, Sonali. And as you said, wasn't easy to find, but I was keeping my fingers crossed that they held onto their gains by the closing bell here. Romaine mentioned this, AT&T stock up about 7.7% in today's session. You did have JP Morgan coming out, reinstating their coverage with an overweight, and of course, you had the Discovery completing its merger with AT&T's Warner Media, so cleaning off some of those assets. And so JP Morgan coming out liking it. I think it was top.
I think it's funny. So does AT&T, does it go full circle, or it just ends up being just like an old telephone company by the time this is all over?
I have to say, I remember just starting working at Bloomberg, and I think it was the, what was it, the TCI, was it?
Yeah.
AT&T merger? Like, if
yeah.
you think about the variations.
Wow.
Or
You must be older than me.
Yeah, I know.
That was a long time ago. I remember covering
It's
that.
a rough Monday. We're
That's all
feeling it. It's okay. I still love you. All right, Billy, I want to mention these Chinese gaming stocks, video game stocks, trading in the U.S. jumping 7.25% higher. And this is as we heard that China approved the first batch of new video game licenses since July. Remember, they were saying this isn't good for kids, so everybody was kind of freaked out about the sector. And then I did want to mention Shopify announcing a 10-for-1 split, so that stock was up about 2.3% in today's trade.
Speaking of fundamental views, right?
Yeah, exactly.
Let's get to some of those decliners. Well, speaking of fundamentals, nothing fundamentally happening with Tesla today, at least causing the stock to move lower, but still among the worst performers in the S&P 500 today. We did get a handful of headlines about Mr. Elon Musk. Of course, we did learn that he decided he would not join Twitter's board, so the saga continues. We did get some good news out of China for Tesla, though. The total number of EVs produced and delivered locally by Tesla in China in March was the highest since December, despite a 6-day plant shutdown caused by production snarls and pandemic-related disruptions. Still, shares moving lower.
Is he still on the board of Tesla, though?
He is still on the board of Tesla, yeah. Still CEO of Tesla. He's the reluctant CEO, right? NVIDIA shares, also among the worst performers in the S&P 500, down 5.2%.
Right.
Baird downgraded the chip maker to neutral from outperform, citing worries over demand. Remember we saw a downgrade last week with the chip sector in general. So we're starting to hear some interesting stories out of when it comes to demand. This one was interesting, though, because the analyst Tristan Guerra actually talked about recent order cancellations and then a slowdown for consumer PC demand and some stuff around crypto mining, too, which I thought was notable. Speaking of crypto mining, Coinbase finishing down by 4.4%. Oftentimes we see crypto-linked stocks move lower when we do see big moves in crypto. But Caroline, as I mentioned,
They should do a stock split.
They might after what? Alphabet, Shopify, Tesla. The list goes on, right? Amazon.
Stock splits for everyone.
That's right.
Meanwhile, Catherine Rooney-Vero was speaking to you a little bit earlier over at Baltic, saying actually crypto's on the downside because dollar is on the upside, and let's go there. Let's go to our FX look ahead, because really it is a story of dollar strength, but also maybe some haven buying as well. We've got the Swiss franc up 0.3%. What isn't a haven anymore, and largely because of a difference in, of course, policy coming from the central banks, and particularly the BOJ, we're seeing Japanese yen near a 2-decade low, off by 0.8%. 125 is where we trade at the moment, and of course the Norwegian krone off by 1.4%, and that's all tied to what's happening in the commodities space. Brent crude off by 3.5%, $99 a barrel. WTI crude off by more than 3%, $94 or $95 a barrel. That as we worry more about perhaps a lack of demand coming from China at the moment. That as we see further lockdowns, Shanghai in lockdown, but still the spread of COVID. And we're seeing therefore maybe a little bit of a haven buying, whether it comes in the wall of worry, a time though not to be getting into bonds. You're not seeing yields push lower, only maybe at the short end, but you're seeing instead the Swiss bond sell-off, German bond sell-off. This is a story more of perhaps where monetary policy is going, Romain.
Yeah, I mean, we talk about that 210s inversion that we had last week, the 210s curve right now at 27 basis points, and a lot of that, of course, is because we're starting to see that long end of the curve get sold off, at least more relative than what we saw on the short end of the curve here. You got a 30-year yield right now that's at 2.8%, a 10-year yield at 2.8 as well. I thought this was interesting, though, here, and Bloomberg pointed this out. The 20-year yield at the bottom of your screen there, at least for our television audience, is up 10 basis points here on the day. That's above 3%. This is the first time that we've had a yield on a benchmark treasury trade above 3% going back, I believe, to April of 2019. So a significant move higher here on the longer end of that curve. A real yield that at one point, at least on the 10-year, was only at negative 10 basis points. It'll be interesting to see what the implications are for this a little bit longer term as we get this steepening, I guess, which some people are saying is more of a bear steepening than it is a bull.
Maybe. I mean, there was plenty of people in that respect talking about, well, really what the bond market's telling us anymore. When it was flat, it was worries about a recession, or when the inversion was there. Now is it that actually we can see the Federal Reserve land this so-called soft landing, as many are hoping, Romain?
Yeah, I spent money this weekend. Did you?
On services or goods?
I bought goods this weekend.
I do want to comment a little bit on Romain's point here, because what's interesting, Bloomberg Intelligence is saying that 10-year yield, even at 2.8, can get much steeper. It could get much further. It can go to 325 if we still keep on seeing inflation break-evens inverting.
I'm curious too, because a little bit earlier on Bloomberg Television, we showed the chart kind of showing the earnings yield versus where on the S&P versus where we are in the Treasury market, and the idea that now you're starting to see a little bit more attractiveness in bonds. But I'm wondering, do investors these days actually think like that? Mainly fixed income investors, because it seems like they look more at the price a little bit, and if they still think they can get some juice out of that, or they can't get, excuse me, then maybe they stay away.
Are you saying 60-40 is dead?
I don't know.
Well, I mean,
let's ask Bill Gross. Is he watching?
What are you putting in that 60 part of the portfolio, right? I mean, what is a bond alternative these days if you're flocking into private credit? Is what my wonder is.
All right, what I'm wondering about is all of this economic news that we're going to get this week. We've got small business optimism. We've got CPI, PPI, retail sales.
Yeah.
What does it tell us about maybe what's going on with the consumer
What's most
ultimately?
important to you?
What?
Which
What's
one
most
of those?
important? I like retail sales.
Yeah.
I want to know what the consumer's up to. I want to know what Romaine's been buying. I want to know what Tim's been buying. But I want to see if there's a shift or if we're starting to see a hesitation. What? I couldn't hear you. You were mumbling.
Yeah, he's saying his wife wants to know where he's buying to.
Those spouses, man, they always want to know what's up with them.
Yeah, I know. So nosy.
I still think
it's like she thinks half of that is her.
I think the CPI print is the one that I'm going to be paying most attention to. And look, we're not going to know if it peaks this month or not. We did just speak to Megan Horniman, the Chief Investment Officer at Verdant's Capital Advisors. She said we're starting to get close to the peak, but she still thinks that we may see a couple more months of elevated levels before we start to see it move lower.
And at what point does that start to really impact sentiment? Because right now you are seeing consumers borrowing. We'll hear from the big banks on Wednesday. But is it healthy borrowing? Are they borrowing to pay back bills? Or are they borrowing to afford their groceries?
I bought airline tickets for a trip over Memorial Day weekend over the weekend.
Yay.
I was blown away by how expensive they were.
Wait, you're going to be off? I didn't hear about that.
Yeah.
Don't do domestic travel. International travel is a little bit cheaper.
This is domestic. This was domestic. It was flights to Cincinnati. It was the most expensive we've ever paid.
Well, and don't forget, we get Delta earnings, I believe, on Wednesday as well. It'll be interesting to see whether that actually has a real material effect.
Meanwhile, Tim, in a knock to sentiment, I can add that my kids' school has been shut as of today. So there we have it. Another parent who then suddenly has to do the flight to finding, and I'm lucky at least. I've got someone else that I can depend on. But yeah, so it begins all over again.
Well, it's a reminder too, we all talk about how we're all feeling. We're going to get a read on sentiment on Thursday. All right, we got to run. We'll catch you again, same time, same place tomorrow for our simulcast. We call it Beyond the Bell.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So we're talking about a lot of stuff, and we will get that University of Michigan sentiment. Sentiment's been coming down, and so we'll see how consumers are feeling.
Peter Atwater back again to talk sentiment. We should do that.
That's a really good idea. All right, right now we want to get to Nancy Lyons in D.C. Hey, Nance.
Well, President Biden says it is time to address the proliferation of hard-to-trace ghost guns. He brought victims of gun violence and law enforcement agents to the White House today to announce new executive orders that he's signing.
The President displayed a kit ordered on the internet that contains the parts to assemble a firearm without a serial number.
Someone on a terrorist list could purchase one of these guns. A felon, a terrorist, a domestic abuser can go from a gun kit to a gun in as little as 30 minutes. If you commit a crime with a ghost gun, expect federal prosecution.
Under the executive order, dealers who sell ghost guns will be required to embed a serial number and run a background check on the buyer. In Washington, Irv Chapman, Bloomberg Radio.
The March Consumer Price Index coming out tomorrow is expected to show another jump. Analysts say the inflation report could reflect prices 8.5% higher than a year ago, which would beat a 1981 record. White House Press Secretary Jen Psaki says Russia's invasion of Ukraine has pushed gas prices higher, and that's what's driving inflation.
We expect March CPI headline inflation to be extraordinarily elevated due to Putin's price hike.
Psaki says average gas prices have risen more than 80 cents a gallon since the Russian military buildup in January. President Biden is taking his infrastructure tour to the nation's heartland tomorrow. He'll be highlighting investments in rural America by heading off to Menlo, Iowa, which is just west of Des Moines. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy Lyons, thank you so much. Nancy Lyons with World and National News in our DC bureau. So, interesting story jumping up on our radar about magic mushrooms.
Yeah, they are showing improvement to brain connections to ease depression. This story, among the most read on the Bloomberg terminal, is about how magic mushrooms connect regions of the brain that are more segregated in people with depression, paving the way to treat the condition differently than with conventional medications. We're talking about psilocybin here, Carol. It's that hallucinogenic compound present in fungi. It actually helped open up and improve communication within the brain for up to 3 weeks. That's according to researchers from Imperial College in London.
Yeah, the result was a liberating effect not seen with traditional antidepressants, specifically Lexapro. This is according to the study published in the journal Nature Medicine. New treatment approaches are needed since as many as 1 in 3 patients do not achieve a full recovery with existing first-line drugs. The World Health Organization estimates up to 5% of adults worldwide suffer from depression, making it difficult to engage in everyday life. We have had a few guests, including just last week, about this brain pill, like different ways of treating depression that's out there, because there are millions who don't find success with some of the traditional treatments that are out there. And I'm trying to think, there was another guest that we've had in the last year or so that I think got into either magic mushrooms, and they're doing research.
I forget who recently wrote that book that was out about this. I'll find that and share.
We obviously need something from memory.
Yeah, we do. Well, here's how they did the experiment, Carol. The team examined brain scans of patients before and after they received psilocybin-assisted therapy or a conventional antidepressant, the drug known chemically as escitalopram. They found the antidepressant had a mild, slower effect than the magic mushroom ingredient.
Right. It was Compass Pathways, one of the companies that we've covered, and also Maron Gribbets last week, who talked about the brain pill. So there's just a lot going on, but they're working towards human trials, hopefully later this year. But I think his trajectory and timeline was like 10 years before you could think about this brain pill. But it is interesting, and using mushrooms and psychedelics, if you will, or psilocybin, they're really looking at different ways to treat people with depression and hopefully get a better outcome. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A move lower for the U.S. stock market, selling into the close. 10-year Treasury yields climbed through 2.75% for the first time since March of 2019. Stocks and bonds retreated today as investors focused on inflation and the impact of policy tightening by central banks. Tomorrow morning, 8:30 a.m. Wall Street time, we get the Consumer Price Index report. S&P today down 75, a drop of 1.75%. Down 1.7%, again at session lows. The Dow down 413, down 1.2%. NASDAQ down 299, a drop of 2.2%. 10-year yield 2.76%. We saw Bitcoin tumble today, down 7.8%. 39,780 right now on Bitcoin. Spot gold up 0.4%, $19.54 the ounce. And a retreat for crude oil. West Texas Intermediate tumbled 3.4% to $94.97 a barrel. Oil resuming its decline as China's largest coronavirus outbreak in 2 years heightens concerns about demand from the world's biggest crude importer. Recapping, S&P down 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. This story is among our most read on the Bloomberg on this Monday. Caught our attention because of its inclusion in the headline of a town, actually, where I live, very near to where I live. It noted how marijuana sellers in the town of Hoboken, New Jersey, just across from Manhattan, on the Jersey side, of course, are sweetening their deals with cash for cops and some other things.
Yeah, community packs with legal marijuana retailers around the U.S. are providing money for food pantries, landscaping, and traffic improvements. Elise Young is a reporter for Bloomberg News. She joins us on the phone from Trenton, New Jersey. Elise, what's going on specifically in Hoboken right now?
In Hoboken, the city is taking 2% tax, that is 2% of gross profits, as it is allowed to do. New Jersey towns are allowed to do that. And then Hoboken had a couple of requests from the two retailers that have gone before them. They said, hey, while you're here, you want to be a part of the community, right? So how about you help us pay for some cops? And, you know, affordable housing is a big thing for us in town. And so is the food pantry. So how about some money for that? Oh, and maybe some education, too. And the pot retailer said, yeah, sure.
What's the thinking here? Is it just that the pot retailers are so desperate to be in cities and towns to set up shop that they're willing to do anything? Like, what's the leverage here that towns and cities have in this when it comes to marijuana sellers?
Well, in most towns in New Jersey, and I might say maybe in the U.S., if you want to come in and build a strip mall and you go before your planning board might say something like, yeah, we'll give you that approval, but you know what? You're going to bring more traffic to town. So we're going to need you to pay for a new traffic light at that corner. And also at the school down the street, we need you to pay for a crossing guard. So this is a whole new opportunity. The marijuana businesses are ripe for asking for even more things because they're going to be there in town for a long time, so long as they stay operating, so long as people keep buying. And there's a social justice component that the city can say so many people of color suffered under these draconian marijuana laws, and we want to make good on that. So that's where the thinking goes for things like affordable housing, food pantries, et cetera. For the businesses, the sooner that they get those licenses in place, the sooner they can start cultivating sales from across the river in New York City. So if Hoboken beats New York City to these licenses, you're going to have all these folks coming over on the subway. It's just one stop away.
What about when it comes to oversight here? Because I've, covering companies and what they say for a decade. There have been many companies that have come out and said, if you approve this merger, regulators, for example, we will do X, Y, and Z for the local community. And then 5 years later, they still haven't done that, even though that merger was approved. Who makes sure that the companies keep their promises?
In Hoboken in particular, these licenses will be reviewed after a year. and I imagine terminated. We're not there yet. I imagine that they would be terminated if they're not satisfying what they promised to do. But a lot of these companies have been estimated to make tens of millions of dollars in their first year. So I doubt any of them will renege on their promises.
Hey, listen, while we've got you, because we're watching what's going on in terms of different states when it comes to pot sales. Another story that came out on the Bloomberg about New Jersey's retail pot sales to start as soon as about a month from now.
Yes, that's correct. New Jersey approved 7 applications today for medical marijuana sellers to enter the retail market. 7 of them, all publicly traded, and they will be approved to actually open their doors and take people's money in about a month, yes.
When you say take people's money, though, you still mean cash, right? Because a lot of these businesses on a federal level are still not really allowed to, well, they don't necessarily find financial institutions that will bank with them.
Right. So far as I understand, it will be very cash heavy. And in New Jersey, the towns that have approved marijuana, one of the very big things that they're asking for right up front of any applicant is, what's your plan to get not only your money, but also your product to and from town safely?
Yeah, you notice if you go by some of these shops in other states, armed security outside of every single one of them, because not only what they're dealing with, but also with all the cash.
Indeed. And some mayors, mayor in Massachusetts told me that they weren't really prepared for the amount of traffic and the weight of the vehicles that carry this stuff around town. So to show you that we're really in a whole new world, they were expecting, higher crime, maybe fires from somebody dropping a big joint and lighting their bedroom on fire or whatever. And that stuff didn't happen, but torn up roads happened because of these armored vehicles that are necessary with a very cash-heavy business.
It's just interesting to see it all moving forward, right? We're still waiting really for kind of federal oversight to really legitimize it, but nonetheless, the states continue to move forward. Hey, Elise, thank you so much. Elise Young, she's reporter at Bloomberg News, joining us on the phone from Trenton, New Jersey. So just across the river, and you think about first mover advantage, right, when it comes to people going across the river. What?
I mean, that's huge. People are, I've been known to go to Massachusetts too.
New York's got to be following pretty closely too, I would expect.
I'm going to miss out on that tax revenue.
Exactly. It certainly adds up. All right, you're listening to Bloomberg Business Week. We're going to talk real estate in just a moment, and then we're going to talk some big tech names. You know them well. That's coming up next.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so a little insight into how the sausage is made. We're on our planning call at 10 a.m. Wall Street time in the morning, talking about our show, and you're like,
We got to
man,
get Brad Stone
did you
on.
read his
His newsletter, yeah. It kind of ties together everything that happened over the weekend with Musk and what happened last week at Bitcoin 2022
Peter
with
Thiel,
Peter Thiel and
Mark Andreessen.
some tweets. We're going to get into it with him in just a few minutes.
That's our tease, because he's going to come in just a moment. Right now, though, let's get back to the markets and a check-in with Charlie Pellet.
All right, thank you very much. Holiday shortened trading week, and it was a down Monday across the board, selling into the close today. Stocks and bonds retreated as investors focused on inflation and the impact of policy tightening by central banks. All major groups in the S&P 500 fell today. The S&P down 75, down 1.7%. The Dow dropped 413, down 1.2%. Nasdaq lower by 299, a drop there of 2.2%. 10-year yield 2.77%. The 2-year yield 2.50%. Spot gold up 0.3%, $19.54 the ounce. A drop today for crude oil. West Texas Intermediate down 3.5%, $94.84 a barrel. Bitcoin, big story today, did trade below 40,000 right now. 40,185. Bitcoin down 6.8%. Well, as for the market backdrop and what was driving trading today, Megan Horniman is Chief Investment Officer at Verdance Capital Advisors. She was our guest right here on Bloomberg Business Week.
The first quarter and even starting off, the past couple of weeks, we've seen sentiment really tested by a complete pivot by the Federal Reserve. We've also seen the war in Russia and Ukraine not ending, inflation an issue. So we have to get back to the fundamentals and actually listen to the CEOs of what they're seeing on the ground as far as the future of corporate earnings.
And speaking of corporate earnings, Wednesday we hear from J.P. Morgan Chase as the banks lead things off. J.P. Morgan Chase down today by 0.4%. Thursday, Citigroup, Wells Fargo, Goldman Sachs, Citigroup down 0.7%. Wells Fargo up today by 1.2%. Goldman down by 0.2%. Briefly, more than 18,000 Etsy sellers have pledged to join a strike, protesting a 30% increase in fees that took effect today. Etsy shares up 0.55%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet there with the Bloomberg Business News Flash on this Monday. Carol Massler along with Tim Stenovic here in our Interactive Broker Studio in New York City. This column by our Brad Stone. He is Senior Executive Editor of Global Technology and, of course, has written several books on Jeff Bezos and the rise of Amazon. Well, this is really about a trifecta of top tech titans.
I think you can get away with writing things in articles that we can't really say on the airwaves here.
Certain
maybe
words we
perhaps
cannot say.
FCC, violations. But the heading is Billionaire S Posters, and it refers to something that people do online. It's what Brad calls the act of writing deliberately provocative or off-topic comments on social media, typically in order to upset others or distract from the main conversation. That's actually according to the Oxford Dictionary. And he talks about it in the context of Elon Musk, Peter Thiel, and Mark Andreessen using social media and large platforms to do that.
Right, and not only that, but he talks about how they use it to advance their own personal interests or financial agendas, and talks about Peter Thiel. We talked about this last week. There he was at the big Bitcoin 2022 conference down in Miami, and then talked about the enemies of Bitcoin, specifically singling out what he called the sociopathic grandpa from Omaha. He was talking about Warren Buffett.
Right.
He also talked about J.P. Morgan Chase CEO Jamie Dimon and BlackRock's Larry Fink as a financial gerontocracy restraining a crypto-inflamed youth uprising.
Well, we should remember that Peter Thiel is long on Bitcoin, and he has said that his biggest mistake was getting into it too late and too modestly, Brad Stone reminds us. He's got $8.3 billion in net worth already. That's how big his fortune is. But if the price of Bitcoin were to go up, he would certainly increase that.
Well, and it's interesting. I think there's a bigger question or a bigger issue at play, and that is, we kind of marvel, we kind of raise our eyebrows a little bit or a lot when it comes to Elon Musk and his use of social media. Let's see what our Brad Stone has to say. He's senior executive editor of global technology at Bloomberg News, has written, as we mentioned, Amazon Unbound, and also the Everything Store. Brad is with us from San Francisco. Brad, Tim and I were just going through your column. Talk to us about it and singling out what Elon, Peter Thiel, and Mark Andreessen have been up to.
Right. Thanks, Carol. Well, what have they been up to? They've been making trouble. I don't know. They've been stirring things up. And look, they're three very disparate tech visionaries and very wealthy people and three very different situations. And yet I was looking for kind of connective tissue. And, maybe there's some words here that are too delicate for radio. But what they're doing in some ways is sort of like being deliberately controversial, inflaming the online dialogue. And I think they're doing it very purposefully. I mean, it might be that all three are looking for a little midlife excitement. But Thiel is like challenging Bitcoin's perceived enemies. Mark Andreessen, obviously the co-founder of Netscape and the co-founder of Andreessen Horowitz. His Twitter feed is remarkable. He's tweeting this meme, the current thing, and sort of making fun of, using some kind of right-wing tropes to make fun of wokeism and sort of like excessive devotion to modern causes like the victims of Ukraine, and then Elon, of course, with Twitter, and and so I'm drawing connections there and going, well, why are these guys who have everything being so troublemaking right now?
Well, I think we've talked a lot about Elon Musk. I think if people who followed politics, especially in 2016, and saw Peter Thiel at the RNC, perhaps understand what Peter Thiel is doing. But you write that Andreessen's descent into this pool of self-serving provocation is more surprising. Why?
Well, he's known for these really intelligent essays, Software is Eating the World, back in, I think it was 2012, and then recently Time to Build, kind of a rallying cry for the COVID-19 pandemic. And so sort of indulging in the current thing meme, which is kind of a right-wing meme, and being so deliberately provocative, it almost feels like he's like making himself laugh late at night, with a glass of scotch tuned into Twitter. And I don't know, it's just surprising. You think of like these guys, they should have maybe better things to do. It's like Elon, like why he's spending so much time on Twitter. Like, I'm not saying what he's doing with Twitter, and the company kind of falls into this category, but certainly the indulging of memes and so much delight that they get in whipping up their followers into a frenzy. That feels like it could and should be time better spent.
I can't help but wonder that there's, regulators back in Washington too, Brad, watching all of this and just scratching their head because it just seems like we've gotten used to it, and it's just kind of odd. Hey, Brad, we've got to run. Thank you so much. Brad Stone, senior executive editor of global technology at Bloomberg News. Check out his books. The latest one, Amazon Unbound, Jeff Bezos and the Invention of a Global Empire. Brad, of course, joining us on the phone from San Francisco.
S-posting, as we can say. That's the delicate way to say that.
Yeah. How you say S-posting. Good to know. This is Bloomberg.
Let's get to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey there, Nance.
Thanks, Tim. President Biden's top economic advisor will not weigh in on whether a recession is around the corner, but Brian Deese did tell Bloomberg COVID lockdowns in China, as well as the Russian invasion in Ukraine, are both weighing on the economy.
We're facing rocky waters right now, but the United States is probably better positioned than any other major economy to navigate effectively through them. Why is that? Strong economic growth, strong household balance sheets, a strong American consumer, and an incredibly strong labor market.
Brian Deese spoke with Bloomberg a day before the release of the March Consumer Price Index. Deese believes that report will show elevated prices, but he hopes inflation will be lower by the end of the year. Russia is claiming it has destroyed several Ukrainian air defense systems as Russian forces move into disputed territory in the east. But the Pentagon's John Kirby is refuting that claim.
I would just say this about Ukrainian air defense. They still have a lot of their air defense capability available to them.
John Kirby says the new General Vladimir Putin is placed in charge of Russian troops is known for being especially brutal. UNICEF says nearly 2/3 of Ukrainian children have been displaced since the start of the Russian invasion. And officials says the situation is dire for those in cities like Mariupol, where kids have gone for weeks without running water and working sanitation. The UN agency is warning of the long-term effects on kids whose lives, education, and well-being have been disrupted by the conflict. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts and more than 120 countries.
All right, Nance, thank you so much. Carol Master, Tim Stanovic. We are at Bloomberg headquarters in New York City. Are you a fan of surf and turf?
I was going to ask if you had any surf and turf over the weekend.
I did not have surf
I
and
don't
turf.
know if I've ever had surf and turf.
Really?
I've had surf, I've had turf, but I don't know if I've ever had one meal with surf and turf.
Is this because you don't like mixing your surf and turf?
No.
It's either got to be surf solo or turf solo?
No, but I will tell you, growing up in California, the first time I had lobster was in college. I went to college in Maine. And the first time I ever had lobster
surf there.
was Maine.
Did you like it?
Yeah, it was good.
Do you have a preference, surf over turf or turf over surf?
Turf.
It's almost like a little skit here, comedy skit we're doing.
Yeah, please tune in.
Surf and turf specials, though, here's why we're talking about it. Leslie Patton and Brendan Case and Olivia Rockman have a cute story, smart story, a sign of the times story on the Bloomberg. When we talk about inflation, we've talked about higher food costs. They write surf and turf specials cut from U.S. menus in a sign of price pain.
Yeah, back in January, the CEO of Beef O'Brady saw signs that consumers were feeling the squeeze of soaring inflation, so he took the $12.99 surf and turf dish off the specials list, replaced it with fish and chips platter, and slapped a $9.99 price tag on it. Even with the change, though, customer traffic has been flagging in recent weeks. We talk about demand destruction, Carol, and I'm wondering if these companies are trying to see it.
Well, and just, I guess, places trying to adjust as things go up. What we are seeing is that companies, restaurants cutting back on more expensive items, consumers cutting back on more expensive items and ramping up on cheaper ones. And that's forcing restaurants, grocery stores, and retailers to rejigger their sales strategy. And this marks a major break from 2021 when consumers, still flush with pandemic stimulus and newly won pay raises, kept spending at a frenetic pace, even as annual inflation surged to a 4-decade high. This is what's been the tricky part, right? We are talking about high inflation, but we still see consumer spending.
Yeah, the drop-off in spending, though, executives and analysts say it's most pronounced in lower-income families as inflation overtakes those wage gains. Food prices rising 7.9% in February over a year earlier, largest gain since '81.
And bottom line, we are seeing it looks like consumers becoming more and more sensitive to price. So we'll see that maybe in some of the data points this week. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. All major groups in the S&P 500 index fell today. Stocks and bonds retreated as investors focused on inflation and the impact of policy tightening by central banks. Oil resumed its decline as China's virus resurgence worsened. Right now, West Texas Intermediate crude at $94.82 a barrel, down 3.5% today. Spot gold up 0.3%, $19.53 the ounce, and Bitcoin today down 7.3%, 39,969 on Bitcoin. The 10-year yield 2.77%. Equities lower across the board with selling into the close. S&P down 75, a drop of 1.7%. The Dow down 413, down 1.2%. Nasdaq down 299, a drop of 2.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So earlier on Bloomberg, JP Morgan Private Bank Chief Investment Strategist Thomas Kennedy says poorly performing financial and housing stocks are signaling a cyclical slowdown in the U.S. economy, even as the Fed plans to tighten policy further this year. Housing stocks, though, I mentioned, we actually saw them up as a group today, but they're down more than 30% so far this year.
Well, it's an entirely different animal when we talk about the island of Manhattan and New York City in general.
So true.
And that's why we're fortunate to have Barbara Fox on, who's president of Fox Residential Group. Fox Residential has been doing this for decades. Barbara, it's good to have you with us. Give us an idea of what you're seeing in the real estate market here in New York City right now, because there's been so much volatility. Carol and I talk about it each and every day with the equity market, and I'm wondering if we're starting to see any of that. And I'll use a term from Abigail Doolittle earlier today. She said stocks were a little smushy this year, I believe. Real estate, not so much.
Not at all. Actually, the market is just on fire right now. And as a real estate professional, we move fast when the market is so good. It's
okay, guys.
really amazing.
As you can see, by the end of the day, we closed position on Bitcoin. Well done. We made £5,000. And all of you guys who followed my trades, good for you. You made a profit. All new people who just started trading, well done. You made your first profit. Don't just stick to this profit. Try to find another profitable security. If you want to get the strategy, you need to go to company.co.uk and you can get the strategy from our website. Stay safe and let's not concentrate on this winning. Let's move on. Let's see what other pairs, what other indices, shares or Forex will bring us even tonight. Okay? Stay safe. I'll speak to you later, guys.
Use that as an investment vehicle rather than the stock market. So, right now there are a lot of things pointing very positively in the direction of investment in real estate.
So back to that, who's buying and is it all cash deals?
Sorry, who's buying? Americans are buying. I just spent the day showing apartments to somebody from Texas and somebody that's moving in from California, and there are a lot of Americans around. I'm not seeing a lot of foreign investors, even though I think that there's going to be a lot more coming forward in the future. And they are, by and large, the big ticket items particularly are all cash deals.
Hey, Barbara, I mentioned you've been doing this for decades. You created Fox Residential Group back in 1989 as a boutique real estate firm. You've seen a lot of cycles when it comes to real estate in New York City. And I'm wondering what happens after you start to see a market this hot. Are you seeing any warning signs right now? What comes next? When does the market cool down? Or is this time different?
Well, it's interesting. I don't know whether it's different yet, but I'm sure we'll find out. But what happens is that our market has historically been very cyclical with regard to the seasons. Spring is usually a very hot market. Fall is a hot market. The dead of summer, July and August, are pretty slow. But in the last year, for example, one of our biggest months the whole year was July. So yeah, it's just everything is sort of topsy-turvy now, and we don't really know where it's going. I think that with the interest rates increasing at this point, I think that people are going to try to get into the market now as soon as possible, because they know that they're going to be, the people that are borrowing are going to want to be able to get the lowest interest rate possible, and that may be a little bit of an impetus for people to buy now in the next 6 months to a year.
So I'm on your website, and I love real estate. I love looking at it.
You should see Carol's face when she's clicking through these links. She's just like, I'll take this one, I'll take this one.
I'm catching flies right now because my mouth is open pretty big. 135 million. This is, where is it? Park Avenue, 432 Park Avenue, 5 beds. Right. Looks like 5.5 baths, I think. I am curious because we often talk, Barbara, about bidding wars, certainly for homes around the U.S. Is there going to be a bidding war on a property like this? Or is this a CEO, a tech entrepreneur, a financial titan who comes in and it's, there isn't a bidding war, just says, I want it, and let's just do the deal?
Yeah, well, it's just, usually if somebody's going to spend that kind of money, they will spend whatever. If they want it that badly, they'll spend whatever they need to spend to get it. So there generally aren't bidding wars. I mean, by and large, aren't bidding wars for these huge number of properties. The bidding wars come in sort of I would say 3 to 8 million properties where there are not very many of them around, and the ones that are around, that particularly the ones that are in good condition, are the ones that are very much in demand, because that's a popular price point I would say between 3 and 8, 2 and 8, 3 and 8, something like that.
Don't you think though, for the deals that aren't all cash, the stuff that could be maybe sub 3 million, sub 2.5 million, are those going to get hit by rising interest rates?
I think they're ultimately they will be hit if the interest rates go up considerably. But New York is very strange in that we get used to things, and we will get used to the higher interest rates. I was in the business when the interest rates were 18%, and we were selling like crazy. So it's everybody gets accustomed to the rising interest rates, and they adjust to it. Yeah, and it's just like the extra taxes that we have to pay on the sale of real estate. It looks terrible when they're first instituting these fees, but everybody gets used to it and they just pay it.
How has the pandemic impacted your market? Because I think there was a lot of discussions about people leaving New York City, even the wealthier, for good. What impact has the pandemic had, if any?
It's had a huge impact. A lot of people did leave the city, and a lot of people left the city, left their old apartments and sold their old apartments and then bought pied-à-terres in the city. And I think we're seeing a lot of that right now. People who weren't sure they wanted to sell, but they didn't really want to keep these big, family homes for years and years that they don't need. So we're seeing a lot of that happening. But there's so many, new people coming into the city, and there's a whole resurgence of the sales in these big family apartments.
Well, it's always fun to talk real estate, fun to especially talk with you about it. I know. I love just perusing the website. Barbara, thank you so much. Look forward to checking in with you again in the future. Barbara Fox, she's president of the Fox Residential Group, joining us on the phone in New York City.
If 140 million is too much, Carol, there's one for 9.5 at Park Avenue.
Sign me up.
Oh.
Done. Okay. I don't even need to look at it. Sight unseen. All right, that's going to do it, folks. Monday done, but we've got a CPI report coming your way and a lot more. For Tim Stadovec and the whole Bloomberg Business Week team, have a good and safe evening.